very good very good evening everyone. कैसे हैं आप सब? How are you all? Everyone fine? Now first, can you inform me, is the audio is right or not? Video is perfect or not? Just inform me by message. Everything is fine, audio, video, everything is clear. Fast. We'll wait for 1 or 2 minutes, then we'll start. Okay. So Rakesh, good evening. Great. Everything is fine? Let everyone join. We'll wait for 1 or 2 minutes. By the time, what you can do, that as you all know that we are going to discuss the top 95 FR expected question. Okay, and already the list I have given. Just inform me whether you have downloaded the list or not. Have you downloaded a list of expected question? Means I have given a PDF in my Telegram channel. If you have not downloaded the PDF till now, you can download it from my Telegram channel. The link of the Telegram channel is given in the description of this video. Means just click the link, you'll directly go to that particular message only. In that, there is one expected question list that you download. In that PDF, you'll get top 95 question list. This is the top 95 question list. Okay. So Ravi Teja has also said perfect. Okay, great. Agnihotri, everything is fine. Very fine. So we can start. Now, what is our objective? Once again, I will say the objective of this particular live session is to do all the expected question and any other question what you think is supposed to be done by me, so that the doubt is clear. You can ask me any doubt at the end of a particular chapter. Suppose today I will start with Ind AS 102. Then first I will take all the questions of Ind AS 102 which are mentioned in my top 95 expected question. That I will do first. Then I will ask you if you have any doubt in that chapter. We'll discuss that also. So if you have any doubt in any specific question, you can inform me by way of message. I will take that also into consideration. Then we'll move to the other chapter. So today the agenda is what? We'll take all the expected question of Ind AS 102, Ind AS 116 and all the asset based Ind AS. When I say asset based Ind AS, in that we'll cover Ind AS 16, Ind AS 38, Ind AS 40, Ind AS 23, Ind AS 20, Ind AS 41, Ind AS 36 and Ind AS 105 and also Ind AS 2. We'll cover all the asset based Ind AS expected question also. Got this fine? Chalega? Yes sir. Let us start with Ind AS 102. So let me identify if you have that list. So in Ind AS 102 we have the first question. There are 6 questions which I have identified as the top 95 expected question. We'll come to first question number 6. Come to question number 6. You can see this is my expected question list PDF. In that question number 5 also we have, but that is my expected question, that is not in my top 95 expected question. Means that is also important, but from my point of view it is not in the 95 expected question. So we'll start with question number 6. Means I am not covering all the expected question list. Expected question in that the total number is 246 question. Of course you are supposed to do all the 246 question from examination point of view. These 95 questions should be given more priority. Means what I will suggest that But right now, if you are planning FR for 5 days, in that, go through all these 246 questions, and in the last day, means in the exam day, when you have nothing to do, suppose you have finished the entire syllabus, then at that point of time you can refer the 95 expected question again, because from my point of view, from this 95 expected question in exam, question may be asked. Of course, there is no virtual certainty for that. It is only probable. Okay, we'll start with question number 6. Will be fast in the explanation. Okay, sir. Entity which follow, we are starting. Can we start? Are you all ready? Are you all ready? Can you give me a green signal? Yes, sir, we are ready. Then we can start. Yes, sir. So question number 6, an entity which follow is financial year as per the calendar year grant 1000 share appreciation right, means it is a SBP plan with cash alternative, to which 40 management employee as on 1st Jan 2005. So how many employees are there? 40. The SAR provide the employee with the right to receive at the date when the rights are exercised cash equal to the appreciation in the entity share price since the grant date. So of course, it is what they will be given cash equal to the difference between market price and exercise price on exercise date. All of the rights based on 31st December 2006. It means what is the vesting period? Vesting period is 2 years. 1st Jan 2005 is the grant date and 31st December 2006 is the vesting date. 2 years is what? The vesting period. And they can be exercised during 2007-2008. Means exercise period is also 2 years. So 2 year vesting period, 2 year exercise period. Management estimate that at grant date the fair value of SAR is 11. Can you see this information not relevant? Because for SAR, any fair value of option on grant date is not relevant. We need to do reassessment of SAR as per the fair value of option at the end of each year. So any fair value of option on grant date for stock appreciation right is not relevant. For ESOP, it is relevant. But for SAR, it is not relevant. And it estimated overall 10% of the employee will leave during the 2 year period. What they have given, overall 10% employee, means during that 2 year they are estimating that 10% employee will leave. This was an estimation. So out of 40, if 4 will go, so 36 will leave. 36 employee will be present. Got this point? It means this is the estimated number of employee who will be able to vest the option on vesting day. The fair values are at each year end are shown below. Now they have given fair values are at the end of each year. This is relevant information. 10% employee left before the end of 2006, and you can say the estimation was 10% and actual is also 10%. So estimation and actual are same in this question. On 31st December 2007, when the intrinsic value of each SAR was 10, 6 employees exercised their option and the remaining 30 employees exercised their option at the end of 2008 when the intrinsic value of SAR was equal to fair value of 12. Means you can see in this question they have given two values. One is the fair value of option, one is intrinsic value of option. Just try to understand, whenever we do payment is always based on intrinsic value of option. Intrinsic value means current value as on that of that particular option. So settlement will be always done based on intrinsic value, but measurement, valuation will be done based on what? Fair value of option. This is the most critical point in this particular question, because they have given fair value of option also and intrinsic value of option. Means if I try to explain, because they have asked how much expense and liability to be recognized at the end of each year and past journal entry. Super easy question, but if you don't understand the information, there may be mistake. Means if I just want to explain the entire information, you can see already I have drawn the timeline. You can see this is the vesting period, this is the exercise period. You can see 2005, 2006 are the two vesting period, and 2007, 2008 is the two exercise period. What is the total number of employee at the beginning? 40, but they are estimating how many employee will leave? 10%, means 4 employee will leave, means 36 employee will be able to vest the option of vesting date, actual as well as estimated both, correct? Then they have given fair value. Already I have said fair value of option grant date is not relevant, but is the fair value of option at the end of each year, and they have given the intrinsic value at the end of 2007 and 2008. So what I said, fair value is for measurement of SBP liability. Whenever you measure SBP liability, you want fair value of option. But whenever you do settlement, means whenever you do settlement of liability, you want intrinsic value of option. This is the key point in this particular question. Got this? Any doubt about this? कोई doubt है बताइए इसमें? Any doubt? Now we can calculate EB expense and the liability. So for the first year, how many employee will take? बताओ. For the first year, how many employee will take? बोलिए. 1 minute. So I will just calculate so that you can understand. So for the first year, how many employee? It was the year 2005. Year 2005, how many employee will take? 36. How many options are there per employee? That is 1000. What is the fair value of option? That is 12, and we will do 1 by 2. 1 by 2. You will get the cumulative expense and then expense that you can get. Correct. Now second year 2006. How many employee? Actually is 36 only. So this is estimated number employee. This is the actual number employee. Correct. Into 1000. But what is now fair value of option? Now the fair value of option become 8. We'll do into 8 and it will be 2 by 2. This will be the cumulative expense, and this minus this you will get the expense of the second year. Expense of the second year. Any doubt up to this? So of course you can calculate that what amount we are getting. You can see this is 2,16,000 is the cumulative expense of the first year. Expense will be also 2,16,000 and the liability will be also 2,16,000. Understood? But for 2006, the cumulative expense will become 2,88,000. The expense will become 2,88 minus 2,16, that is 72,000, and the liability will be 2,88,000 because in the second year no payment has been done, no settlement has been done. But in the year 2007, out of 36 employees, 6 employees has exercised the option. It means the settlement is required, and settlement will be done based on intrinsic value of option. What is the intrinsic value? That is 10. So what we will do? 6 into 1000 into 10. That is the settlement value. Yes, sir. And the balance 30 that employee has not yet exercised. So what will take? We'll do the measurement of liability for that, and that is based on the fair value of option. So 30 into 1000 will take fair value, and fair value is what? 13. So we'll do 30 into 1000 into 13. Understood? This is the point where you can do mistake. Any doubt in this? So this amount is coming how much? 4,50,000. Out of 4,50,000, how much expense already you have recognized? 2,88,000. 2,88,000. So it means the expense of the third year, it has been, the liability has been increased by how much? 1,62,000. So that becomes the expense of third year. But out of 4,50,000, how much already you have paid in this year? That is 60,000 you have paid. So 4,50,000 minus 60,000, the remaining will be the liability of the third year. Now I'll come to the last year. Last year 30 employee has what? 30 employee will exercise the option, and the intrinsic value and fair value option on settlement date will be always equal. Means just try to understand. Suppose in exam they have not given intrinsic value of the last year. Means at the last year means at the end of the contract. So always intrinsic value and fair value of option will be same. If suppose one is not given, so other is equal to that. Got this point? Yes, sir. So into 12 will do. So 30 into 1000 into 12 will do. This will become 3,60,000. Now 3,60,000, what was the liability? Liability was 3,90,000. So 3,90,000 become how much? 3,60,000. So the liability has reduced by 30,000. So that is the reduction of expense in the fourth year. Reduction of expense in the fourth year. Understood this point? Any doubt in this calculation? Bolo. Any doubt in this calculation? Fast. Once you will say, sir, move, we'll move to the next question. But of course, we'll do the journal entry. So what will be journal entry of first year? That will be EB expense account debit to SBP liability. With what amount? Amount will be how much? Everyone need to respond with me. Everyone need to respond to me. When I'm asking amount, you just need to respond what is the amount. The amount will be 2,16,000. 2,16,000. Correct? Second year, 1 second, the journal entry is what? EB expense account debit to SBP liability. Amount is 72,000. Correct? Third year, once again, the journal entry is EB expense account debit to SBP liability 1,62,000, but the payment has been also done to SBP liability account debit to bank. How much? 60,000. Got this point? The last year, the journal entry will be what? EB, there is a reduction of expense. So journal entry will be what? SBP liability account debit to EB expense, and the amount is 30,000, but the entire amount has been paid. So journal entry will be what? For payment, SBP liability account debit to bank, that is what? 3,60,000. Entire journal done. The question, if it is of 10 marks, you will get 10 out of 10. Only what I have seen in exam, when you are writing EB expense, in bracket write down profit and loss. Correct now. So EB expense, in bracket you write down PL, so that the examiner understand that EB expense will be transferred to profit and loss account. And if you are writing EB, in the first journal entry write down employee benefit expense, then you write down in bracket employee benefit means EB. Got this point? SBP is a common term you can use in exam. It is understood by everyone. So if you are writing SBP, it is understood this is share based payment. Got this point? Yes sir. Can we move? Yes sir. Now coming to the next question in the list, question number 7. So come to question number 7. What is question number 7? Let's see. Chalo, question number 7. It is a question of SBP with cash alternative. SBP with cash alternative. So on 1st Jan 2001, ABC Limited gives an option to key management employee to take either cash equivalent to 1,000 shares or 1,500 shares. So either cash equal to 1,000 shares or 1,500 shares. The minimum service requirement is 2 years, and the shares being taken must be kept for 3 years. You can see in this case, the exercise price is not given. Whenever exercise price is not given, then exercise price is equal to nil. Whenever exercise price is nil, then fair value of option will be always equal to fair value of shares. Means then it will be same, because fair value of option means what? Fair value of option means what? Market price of shares minus exercise price. Are you able to understand? So in this case, fair value of option will be equal to fair value of shares whenever exercise price is nil. So be careful. In some question they may give exercise price. Then you need to take fair value of option, not fair value of shares. So fair value of shares and fair value of option are two different terms. Accounting is done based on fair value, means expense is recognized based on fair value of option, not fair value of shares. But whenever exercise price is nil, then fair value of option and fair value of shares are same. Got this point? Yes sir. So fair value of shares are as follow. Why they have given fair value of shares? Because exercise price is nil. Yes sir. So share alternative fair value with restriction. With restriction. So can you say whenever they will go for equity shares alternative, so there is a restriction of how many years? 3 years. So this is the share alternative fair value with restriction 102. It means it is the fair value of shares for equity settlement. Equity settlement. And grant date fair value on 1st Jan 2001. If nothing is given, so can you say it is without restriction? So without restriction, it means it is for cash settlement. It is for cash settlement. And can you say we want fair value on at the end of each year for cash settlement, for remeasurement, So this is also for which settlement? Cash settlement. Got this point? The key management exercise cash option at the end of 2002. Past journal entry. The first in this question, what we'll do? We'll find out the equity, fair value equity, and then fair value liability on grant date. So what is the fair value equity? You can see that is 1,500 into 102. How much? So that becomes 1,500 into 102. That is equal to 1,53,000. Am I right? Then what is the fair value of cash option? Fair value of cash option, that is 1,000 into 113. So 1,000 into 113, that is 1,13,000. Correct? What is the difference? Difference what? 1,53,000 minus 113,000, that is equal to 40,000. Correct? So this become the maximum liability and this become the minimum equity. This become the minimum equity. So on grant date will split it into two parts. What is the fair value of liability component? The fair value liability component will be 1,13,000 and fair value equity component will be 40,000. And can you see fair value equity component? The accounting treatment will be as ESOP, whatever we have done. So that will not be reassessed at the end of each year. So 40,000 will be divided in 2 years because the vesting period is 2 years. So EB expense for the equity will be 20,000 and 20,000. But can you say fair value of cash alternative will be reassessed at the end of each year? So for that reassessment is required. And reassessment will be based on 120 and 132. Got this point? So what reassessment will do? We can understand from the solution. You can see 1,53,000 minus 1,13,000. It becomes 40,000. Now cash option, what is required? Reassessment. So we'll take 1,000 into what? 120. So 1,000 into 120 divided by 2. How much? 60,000 for the first year. You can see 60,000 for the first year. Then for the second year, it will be 1,000 into 132 divided by means 2 into 2. But from out of this, how much already recognized in the first year? That is 60,000. We will do minus 60. It becomes 72,000. And you can see the 72,000 is the expense of the second year. And for equity, it is 20,000, 20,000. So total expense become 80,000 and 90,000. This is the solution. Super easy. This type of question can be asked for 6 marks. Now, journal entry what? First year journal entry means at the end of first year journal entry what? EB expense 80,000, to SBP reserve 20,000, to SBP liability 60,000. Got this point? At the end of second year, EB expense 92,000, SBP reserve 20, and SBP liability 72. Now it is given in the question that employee has opted for cash option. It means SBP liability will be settled. So SBP liability will be settled at what amount? The amount is what? 1,32,000. Journal entry what? SBP liability account debit to bank 1,32,000, and whatever amount is in SBP reserve that will be closed by transfer to retained earning. So what journal entry will do? SBP reserve account debit to retained earning. Got this point? Suppose in the same question it is given that all the employee has opted for equity settlement, then what would be the journal entry? In that case, our journal entry will be what? In that case, our journal entry will be SBP reserve account debit to 40,000, SBP liability account debit 1,32,000, bank account debit if there is any exercise money, but in this question there is no exercise money, correct, to equity share capital with nominal value, and the difference will be transferred towards securities premium. The balancing figure will be securities premium. This will be the journal entry for equity settlement. Okay, sir. Understood. So question number 7 also done. This is also one of the favorite question of the institute, which is normally asked in exam. Okay, sir. Done. The next question is question number 16. Come to question number 16. Question number 16. This is also one of the good questions for modification. I like this question personally. Till now not asked in exam. QA Limited had on 1st April 2015 granted 1,000 share option to each of its 2,000 employees. The options are due to vest on 31st March 2018, means 3 years, provided the employee remain in the employment till 31st March 2018, means 3 years is the vesting period. On 1st April 2015, the directors of company estimated that 1,800 employees would qualify for the option on 31st March 2018. Okay, the estimate was amended to 1,850 employees on 31st March 2016 and further amended to 1,840 employees on 31st March 2017. Means what they have given? Check karenge. They have given how many years? 3 years. Okay, this is 31st March 2016. This is 17 and this is 18. How many employees? Initially they were how many employees? 2,000, but they estimated that how many employees will vest the option, that is 1,800. Okay, then it was changed to 1,850 and then 1,840. It was changed to 1,850 and then 1,840. This was the question. So this was estimated at this point of time, this was estimated at this point of time, this was estimated at this point of time, the number of employees. Okay, sir. Yes, sir. Then what is given on 1st April 2015? The fair value of option is 1.20. So what is the fair value of option on grant date? On grant date it was 1.20. Okay, sir. The fair value increased to 1.30 as on 31st March 2016, but due to challenge business conditions, the fair value declined thereafter. Thereafter it become 1.30. Here it become 1.30. Okay, sir. Then what is given? If you read the question, in September 2016, when the fair value of option was 0.90, means on September it becomes 0.90, 0.90 decline. Okay. The director repriced the option. Reprice means modification. Modification means exercise price has been changed. And this caused the fair value to increase to 1.05. So due to repricing, now it become 1.05. 1.05. Okay, sir. Trading condition improve in the second half of the year, and by 31st March 2017, the fair value of option was 1.25. So in the next point, they have given at this point of time, it become 1.25. You can see no information in the question has been given for the third year. It means in the question they have asked only for the first year and second year. Third year no information has been given. So for third year we will not do any calculation. Now they have asked what is the EB expense of the first year and second year. This is the question, ultimate question, because so many information has been given. So many information has been given. So what are the information which is not relevant? So whenever you are calculating EB expense for the year 1, so which information relevant? Whether you will take which employee, 2000, 1800 or 1850. Can you say this all information bakwas? Because we'll take estimation at year end 1, because EB expense we are calculating at year end 1. So any information or any estimation given at year beginning, that is not relevant. Suppose this 1850 was, suppose this information is not given, then we can take one assumption that the same estimation will prevail. Same estimation will prevail. That will be our assumption. Got this point? But because the question has given this separate information of estimation at year end 1, therefore whatever estimation has been done on grant date, that become irrelevant, not relevant. Understood? So we'll take how many employee? 1850. This is only the interesting point. Student will do mistake at this point of time, because in exam you will be in hurry. Right now you may be thinking this is very simple point, but in exam it is super dangerous point. Okay, sir. Then how many option per employee? That was given the question. What is the option per employee? 1000 share option. So 1000 share option. Then what is the fair value? So which fair value is relevant? You say me. Everyone respond. Which fair value is relevant? 1.20 ki 1.30? Which is relevant? Fast. 1.20 ki 1.30? Fast. 1.20, 1.30? Fast. Which is relevant? Everyone respond. Fast. सब रेस्पॉन्ड करेंगे. देखिए मैं मैक्सिमम इंग्लिश यूज कर रहा हूं. व्हाई आई एम यूजिंग मैक्सिमम इंग्लिश? बिकॉज इंग्लिश स्टूडेंट, द स्टूडेंट who don't know Hindi can also understand this. Any student who know Hindi and English can also understand this. करेक्ट ना? लेकिन बीच बीच में अगर आप बोलोगे तो मैं हिंदी भी यूज करूंगा. ये आपकी इच्छा के हिसाब से मैं कर सकता हूं. Okay, but explanation I will give in English only, so that any student who know only English, they don't know Hindi, can also understand this particular revision. Okay, sir. So how many you are saying 1.2? 1.2 is correct. 1.30 is not correct, because this is a question of what? Equity settlement. This is not a question of cash settlement. Understood? So 1.20 is relevant. Very good. Those who have said correct, they are eligible for one chocolate. 1.20. Then we'll do what? 1/3. So this become the expense of first year. This become the expense of first year. Now coming to year 2. Now in year 2 modification happen. Now what Ind AS 102 says, that whenever there is a modification, and that modification is beneficial, that modification is beneficial to employee, then you recognize original expense as you are recognizing for the original plan. Please don't do any changes in the original plan. So original expense will be recognized as it is. So first we recognize the original expense. So original expense will be based on how many employee now? 1840. So 1840 into 1000. Now we'll take again 1.20 into 2/3. This become the original expense. Now due to modification there will be one additional expense which will be recognized as an expense over the remaining vesting period from the date of modification. So what our Ind AS 102 say that you need to find out incremental fair value option. So due to modification, just try to understand fair value original plan on the date of modification was 0.90 and fair value modified plan was 1.05. So what is the incremental fair value of option? That is 1.05 minus 0.90 is equal to 0.15. So this will be considered as an additional expense due to modification, which will be recognized as an expense over the remaining vesting period from the date of modification. From the date of modification, this is the main point. So from the date of modification means this become 1.5 year. In the current year, it is 0.5 year. Are you able to understand? It means what will be your additional expense? That will be 1840 imply into 1000 into 0.15 into what? 0.5 divided by 1.5. This is interesting point. This is the interesting point. Understood? Always be careful. This will be always same. This will be always same. This will be different. And of course, the vesting period will be different. This will be also different. Understood? Have you understood? Of course, calculation you can do. Calculation is not at all important. Have you understood this point? Got this point? Yes, sir. Suppose they have given actual number employee is 1820. Suppose they have given actual number employee. So what we'll do? So in the third year, we'll do 18. How much? 1820 for original expense into 1000 into 1.20, 3 by 3. This I have taken assumption. This I have taken assumption to explain you third year also. Plus 1820 into 1000 into 0.15 into what? 1.5 divided by 1.5. So this will get cumulative expense. From cumulative expense, deduct this, you will get the expense of the third year. Understood? Super easy. This I am expecting. This I am also expecting in exam. Okay. I am not calculating the amount. You are understanding the working or not. Working is more important. Calculation you have calculated. You can do it by your own because calculation is given the solution also. Okay, sir. The working is very important. Now, suppose the same question is given based on SAR. Suppose the same question is for SAR. Now, in one of the exams, similar question was asked related to SAR. Normally, modification is relevant for equity settled SBP. But suppose the modification has been done for cash settled SBP, then what will do? Then of course the entire solution will be changed. Then whatever information, this information is not relevant. Then what will do? Our year one. If suppose it is SAR. Okay, SAR means what? Cash settled SBP. The first year will take 1850 into 1000 into what? But if it is SAR, we will take which fair value? For first year, we will take 1.20 to 1.30. 1.20 to 1.30. But if it is SAR, everyone react with me. How much? It will be 1.30 because it will be fair value of option at the end 1.30 into 1 by 3. Year 2 what will do? 1840 into 1000. Now there is no concept of incremental fair value option. Can you say we'll take fair value of modified plan at year end 2? At year end 2. Got this point? So now you only take fair value of modified plan at year end 2 and that is also given. How much given? 1.25. Now this all information is bakwas. This all information become bakwas for SAR. Are you getting? For stock appreciation, right? All this information become bakwas. You will take fair value of option at year end 3. Sorry, at year end 2. That is 1.25. You will take into 1.25 into 2 by 3. And then year 3 also you can do if the information has been given. This is for SAR. Got this point? If you have understood, please just inform me. Are you able to follow me or not? If you are able to follow me, say yes sir, we are able to follow me so that I can proceed. Chalega. This question also done. This question also done. Coming to next question. Question number 18. Come to question number 18. We'll come to question number 18. Question number 18 is related to cancellation of plan. I'm also expecting the same question, maybe also expected in multiple choice question. Cancellation of plan. So what they have given? Anara Fertilizer Limited has issued 2000 share option to its 10 director for an exercise price of rupees 100. The exercise price is rupees 100. The directors are required to stay with the company for the next 3 years. Fair value of option estimated is 130. Expected director to vest the option is 8. Means the actual number of employees is 10, but they are estimating 8 number of employees. During the year 2, there was a crisis in the company and the management decided to cancel the such scheme immediately. Means during year 2, the plan has been cancelled. During year 2, the plan has been cancelled. Okay, sir? Yes, sir. It was estimated further as below. Fair value of option at the time of cancellation is 90. Market price of shares at the time of cancellation. This is totally bakwas information. We don't require market price of shares. If they have given market price of shares, that is given to confuse you. There was a compensation which was paid to directors, and since only 9 directors, means now actual number employee on the date of cancellation is 9. We are currently in employment, and what they are saying, payment has been done, means compensation has been done at 95 per option has been given to 9 directors, means actual compensation is 95 per option. Means let me explain what they have given. Initially it was 3 years. How many directors? Initially 10, but they estimated 8 number employee will vest the option. What is the fair value of option on grant date? It is 130, and fair value of option on the date of cancellation, on the date of cancellation is 90, and on the date of cancellation the actual number employee is 9, and the cancellation means compensation has been paid at rupees 95 per employee. This is the entire question. This becomes the date of cancellation. This is the date of cancellation. Okay, correct. An exercise price is also given, that is 100, but that exercise price is not relevant because the plan has been cancelled. The plan has been cancelled. So year 1, can you see, year 1 will pass one journal entry, EB expense account debit to SBP reserve. So year 1, how much expense you recognize? That will be how many employee? 8 employee. 8 employee. How many options per employee? That is 2000 share option. So 2000 share option. What is the fair value? That is 130. We'll do 1 by 3. 1 by 3. How much is coming? 8 into 2000 into 130 divided by 3. That is coming how much? 6,93,333. Got this point? Okay. Very. Oh, someone has answered before me. Very good. What is the name? Janani. Am I whether the pronunciation is correct? Okay, sir. Very good. Year 1 is very simple. Journal entry what? EB expense account debit to SBP reserve. Now what year 2? What Ind AS 102 says that on the date of cancellation, you recognize all the expense on the date of cancellation, means all the remaining expense will be recognized on this date only. Are you getting? Means even though plan was cancelled here, but all the future expense will be also recognized on this date. So what you will do? You will take 9 employee now, actual number employee 9, 2000 into 130 into 3 by 3. This become the total expense minus how much already recognized? 6,93,333. So this much expense will be recognized on the date of cancellation. On the date of cancellation, how much it will come? 9 into 2000 into 130 minus 6,93,333. That is equal to how much? It is 1,60,000. Am I right? 1 second. 9 into 2000 into 130 minus 6,93,333. How much it is coming? 1,64,000. Sorry, it is 16,46,667. Am I right? This is coming correct? Yes, sir. Coming correct. Yes, sir. So this you can calculate. Understood? So what journal entry you will do for this? EB expense account debit to SBP reserve. EB expense account debit to SBP reserve. Correct? Now, can you say, just try to understand. Now, because now cancellation has been done. Now payment need to be done. So payment will be now made based on what? Fair value of option on the date of cancellation. So what is the fair value of option on the date of cancellation? So fair value of option on the date of cancellation, if you think, that is how much? 90. So now if you want to do payment, means if you want to convert this into liability, the liability will be measured based on 90, means it is nothing but repurchase of equity. So SBP reserve will now become SBP liability. SBP reserve will now become SBP liability. Got this point? Correct. So we'll pass one journal entry. I'm just explaining what journal entry will do. SBP reserve account debit to SBP liability. Your reserve is how much? 9 into 2000 into 130. That is how much? 23 lakh 40,000. But your liability will be 9 into 2000 into 90. 9 into 2000 into 90, that is equal to 16 lakh 20,000. Correct. And the difference will be adjusted in reserve and surplus. The difference will be adjusted in reserve and surplus, because whenever you do repurchase of equity, the difference will remain in equity only, and therefore that will be adjusted in retained earning or any other equity. Okay, sir. So what you will do, you can add on 2 retained earning or any other equity of your choice. So this will be 23 lakh 40,000 minus karna, this will be 7 lakh 20,000. So this journal entry for repurchase of equity interest from employee. Correct. And now the settlement has been done based on 95. The settlement has been done based on 95. So your SBP liability is how much? 16 lakh 20,000. But you have done payment based on what? 95. So 9 into 2000 into 95. How much? 9 into 2000 into 95. That is how much you have done? 17 lakh 10,000. So any extra amount paid, your liability was 16 lakh 20,000, but you are doing excess payment will be loss, and that loss will be transferred to PL. Got this point? So this loss will be transferred to PL. So how much will be debited to PL? So minus 16 lakh 20,000, that will be equal to 90,000. This will be the last journal entry. Understood? So what type of question? Suppose they ask MCQ based question, so they can ask 3 questions in this. First, what will be the expense of second year? The expense of second year will be this. You can calculate. Second question they ask, what is the loss which will be debited to PL? The loss debited to PL will be 90,000. Means 95 minus 90. That is 5 rupees per option. You can calculate, and then you can do 9 into 2000 into 5. That will be the loss. The third point was what they may ask, what is the amount deducted from equity? So can you say amount deducted from equity? Amount deducted from equity is how much? 23 lakh 40,000. This will be the answer. The amount deducted from equity is 23 lakh 40,000. This will be answer. So 3 type of question can be asked in MCQ. What is the expense of second year? This is the answer. What is the amount deducted from equity? That is 23 lakh 40,000. What is the loss debited to PL? That is 90,000. Understood? Have you understood? You can see they have also given this only. You can see the amount transferred to PL is 90,000. And amount debited, amount deducted from equity is 16 lakh 20,000. 16 lakh, sorry, you can say in this way, 20 lakh 40,000 minus 7 lakh 20,000. That is the amount deducted from equity. So 20 lakh 40,000 minus 7 lakh 20,000. So as I am fast, I have said wrong. 23 lakh 40,000 minus 7 lakh 20,000. That is the amount deducted from equity. Okay, sir. Okay, sir. Chalega. Can we move fast? Yes, sir. So this question can be important for MCQs. Okay, sir. Next point. Question number 23. Come to question number 23. This is very simple question, but expected in exam. Once again, can be expected in multiple choice question also. This is a question of what? This is a question of group share based payment plan. Group share based payment plan. What they have given? A parent company P grant 30 shares to 100 employee, each of its subsidiary, company S, on the condition that employee remain employed by company S for 3 years. Assume that at the outset and at the end of year 1, year 2, it is expected that all the employee will remain employed for all the 3 years. Means no employee is going to leave the company. At the end of year 3, none of the employee has left. Means actually no employee has left. The fair value share on the grant date is 5. Means based on this information, what is the what is the EB expense of each year? So can you see it will be how many employee? 100 employee. How many option? 30. What is the fair value of option 5? Into 1 by 3 you'll do. So how much it is coming? 100 into 30 into 5 divided by 3. Means 5,000 per year. So 5,000 per year become EB expense. Okay, yes sir. Company X agreed to reimburse Company P over the term of the arrangement for 75% of the final expense recognized by the Company S. What will be the accounting treatment in the books of Company P and Company S? So in this case, what is the entry in the books of Company P? Can you say it is an expense of which company? Because it is an employee of subsidiary. So expense of subsidiary, but SBP reserve of Company P means parent company. So in the books of P, our journal entry will be investment account debit to SBP reserve. But out of 5,000, how much is reimbursement? 75%. So that will get amount in cash. So our journal entry will be investment account debit, cash or bank account debit to what? SBP reserve in the books of Company P, parent company. So what they have given, check karo. Investment account debit with 25%, cash or bank 75%, to equity you can add on SBP reserve. You can add on SBP reserve. So year 1, year 2, year 3 same journal entry. Year 4 on the date of exercise you can pass one more journal entry, SBP reserve to equity share capital plus securities premium. Understood? But that information has not been given, you can ignore it. Okay sir. In the books of S, what journal entry? It is the expense, EB expense of which company? S. So EB expense to cash or bank to capital contribution from parent company. To capital contribution from parent company. So you can see EB expense 5,000, cash or bank 3,750. To equity means capital contribution from parent company 1,250. Same year 1, year 2, year 3 same journal entry. Okay sir. Can we move? Boliye. Can we move? Any doubt? Up to this, any doubt? No doubt. Come to the next point. Next question is 39. 39 also I am expecting. Because this question I am expecting from 3/4 attempt, but till now not asked. But now my point is that it can be asked in exam. 39 easy only, but lot of calculation is involved. If one mistake, entire solution is wrong. So high level of concentration required. The following particulars in respect of stock option granted by company are available. Number of employee covered 400. Number of option per employee 60. Nominal value per share 100. Exercise price per share 125. Okay. Now in this question, what will happen? One plan will be divided in 3 groups. Every group will have a different vesting period and they have a different fair value of option. Yes sir. So shares offered we have put in 3 groups. Group 1, 20% of shares. 20% of shares means 20% of 60 means how much it is? 60 into 20% means 12. Correct. Means 12 shares offered with a vesting period of 1 year. Group 2, 40% means 24 shares offered with a vesting period of 2 years. And group 3 with 40% shares means again 24 offered with a vesting period of 3 years. Fair value of option per share on grant date for group 1 10, for group 2 12.5, for group 3 it is 14. Yes, understood? Yes sir. Now position of first year, number employee left 40, estimate of employee to live in year 2 is 36, estimate employee to live in year 3 is 34, employee exercising the option in group 1 is 350. Means how many employees exercising group 1, because group 1 vesting period is 350, group 1 vesting period is 1 year. So how many employees exercising group 1? That is given 350. Same they have given position of second year and position of third year. Option not exercised immediately on vesting were forfeited. Compute expense you recognize in each year and show important account in the books of company. Once again, solution is very easy, but high chance of mistake. If one mistake you have done, the entire solution wrong. So in this, careful analysis required. Means you need to be very much careful in exam. Yes sir. Let me explain you this. You can see this is the entire question. So 400 employee, 60 option, exercise price 125, nominal value 100. Now option, it has been divided into 3 groups. First 12, 24, 24, vesting period 1, 2, 3, fair value 10, 12.40. Now how many employee left in first year? 40. How many employee will leave, estimate to leave in year 2? Year 3, 36, 34. Correct. It means how many employee has actually vested the option for group 1. So how many employee actually vested the option for group 1? That is 400 minus 40. So vested is 360. But how many employee exercise? 350. So how many employee has fulfilled the condition? That is 360. But out of how many 360 employee, how many employee exercise the option of group 1 is 350. Means how many employee has not exercised the option is 10. So their option will be cancelled. So this you need to find out. Means I can explain for the first year, second year, third year you can do. Okay. Now in this case, can I say for group 1, it is vesting period 1 year. So for group 1, how many employee you will take? For group 2, how many employee you will take? For group 3, how many employee? So when you are in year 1, so this entire information is not relevant. Normally what happens, student do mistake in exam. Right now you will be able to understand. But in exam, in hurry you are doing, in hurry you will do mistake. Whenever you are in year 1, don't consider year 2 and year 3 information. Because that information you don't know. So how can you consider that information in year 1? Chalega. So for year 1, for group 1, how many imply 400 minus 40? That is how many 360 imply. For group 2, because group 2 is expected to vest, means group 2 will vested in second year, you will say 400 minus 40 minus 36. Minus 36 na, to 400 minus 40 minus 36 means 324 imply. Will take 324 imply. And for group 3, because that is going to vest in third year, will take what? 324 minus 34 you will do. So minus 34, that is 290. First you need to identify this as correct. Okay. Then how many options? How many options? Different. This is 12. This is 24. This is 24. Then what is the fair value? Different. It is 10. This is 12.5. It is 14. Then what is the vesting? That is also different. This is 1 by 1. This is 1 by 2. This is 1 by 3. And you can find out the EB expense of first year. This will become the total will become EB expense of the first year. This only calculation has been done here, but you can check it. Got this point? Have you understood this point? Chalega. Same thing you can do for second year and third year. But have you understood this? Bolo. Any doubt in this? Only now I need to just explain the journal entry, or you can say the ledger account, because in this question they have asked ledger account. But first, can you inform me that you have understood this? So first year you have understood. I'll just do the second year also. So first year this amount will come 1,24,280, and then 1,24,280. This is cumulative expense, and expense will remain same. Correct. Now coming to second year, one more year I am just explaining. If I'll say second year, now group 1 no more requirement, group 2 and group 3 will do. So now how many employee? Actually you can see 400 minus 40 minus 35. So 400 minus 40 minus 35. So how many employee has vested group 2 plan? That is 325. But how many employee has exercised group 2? That is 390. That is given the question. So 6 employee has, for 6 employee the group 2 plan will be cancelled. This too you need to identify by your own. Chalega. Okay sir. Yes sir. Means can I say for group 2 will take 325 employee, and for group 3 will take 325 minus 30. That is 295. That is 295. Means whenever you are in year 2, then don't consider third year information. Now what is the option? Option is what? It is 24. 24. What is the fair value? 12.5. 14. This is 2 by 2. Vesting period 2 by 2. This is 2 by 3. So this will come cumulative expense. From this, if you reduce the expense of previous year, you will get the expense of the second year. Third year you can do it. Okay sir. Yes sir. Chalega. So I think you can also work out this. This is very simple. Only working is the point. Now coming to the ledger account, EB expense, of course you can draw. EB expense is what? Only 3 journal entry you will do for 3 journal entry is required. EB expense account debit to SBB reserve, EB expense account debit to SBB reserve, EB expense account debit to SBB reserve in the first 3 years, 1 to 3, and then that EB expense will be transferred to PL account. Now coming to SBB reserve account. So guys, first we will do by EB expense of the first year. Correct? Understood? And can you say at the end of the first year, group 1 will be exercised? So out of how many employees? You are saying out of how many vested employees? 360, 350 will exercise. Means we'll receive some exercise money to what journal entry? Bank account debit to SBB reserve. We will do by bank 350 employees. How many option? 12. What is the exercise price? 125. So this is the amount received for group 1. Correct? From whom? From the employee who have exercised group 1. Chalega 5,25,000. What journal entry? Bank account debit to SBB reserve. Okay. Then can you say we'll do allotment of equity share, that journal entry what? SBB reserve to equity share capital and securities premium. Okay. To equity share capital 350 into 12 into nominal value. Normally students do mistake in securities premium. So what would be the securities premium? That we need to find out. Okay, premium per share will be based on what? What is the exercise price? 125. What is the fair value of option 10? Total become 135. And what is the nominal value? 100. So 35 per option will be the premium. Per share you can say will be the premium. So 350 into 12 into 35 will be premium. Now how many employees has not exercised? That how many employees? 10. So that will be transferred retained earning. So we'll do SBB reserve to retained earning. Got this point? So that 10 employee into 12 option into fair value option for group 1, that will be transferred to what? Retained earning, and the balance will be carried forward. So this will be the balance of this account which will be carried forward to the next year, and the next year, second year and third year also you can do by this. Okay sir, chalega. Any doubt? This is also one question which I am expecting, because good question have been asked in RTP, till now not asked in exam. Okay. So with this you can see we have completed all the question, but I would like to take one more question, a bonus question. A bonus question, because of course if you are with me, so I need to give you one bonus question which is also expected. Means I like this question. It is recently added in the RTP of May 2025. Quite sure it can be asked. At 1st April 2001, an entity enter into a share-based payment arrangement with its employee. The terms of award are as follow. Employee required to work for the entity for 5 years. After that, they will receive a cash payment equal to the value of entity shares. Means what they are saying, employee need to work for how many years? 5 years. And they will receive a cash payment equal to the value of entity shares. Means it is a cash settled SBP. If the entity achieve a successful IPO during the 5-year period, the employee will receive free shares rather than cash payment. Means can I say it become SBP plan with cash alternative? So employee might receive free shares at the time of IPO or a cash payment at the end of 5th year, but not both. So of course this is option, but this option is with employee or entity. So it is with entity. Whenever option is with entity, then we need to find out whether there is a present obligation to settle in cash. If there is a present obligation to settle in cash, then we'll go for SBP liability account. But if there is no present obligation to settle in cash, then we'll open SBP reserve account. Got this point? This is as per the requirement of Ind AS 102. No employee are expected to leave the entity over the next 5 years. As the date of the award, means on grant date, until the end of 2nd year, it was not probable that a successful IPO would occur before year 5. Means can a 1st year, 2nd year it was SBP liability, because there is a present obligation to settle in cash. At the end of year 3, a successful IPO become probable. Now we'll do reclassification of SBP liability to SBP reserve, because now there is no present obligation to settle in cash. And the management expect that it will occur in year 4, and their expectation is that IPO will occur in year 4. At the end of year 4, a successful IPO occurs and the employee receive free shares. The fair value of equity settled award already is 1,000 on grant date. The equity settled award alternative is 1000 granted. The fair value of cash settled alternative ignoring the probability that IPO will happen within a 5 year, 50 at the end of first year, 500 at the end of year 2, then 100, then 50. This is the entire question. So first year 1, बताओ SBP liability की SBP reserve, SBP liability. So we'll take which information? 1000 ki will take 50, will take 50. So how many employees are there? You can say nothing has been given as per the employees concerned. So only we need to consider this 50 fair value. So what they have done, they have considered based on 50. So 50 into 1 by 5 will do. That will become 10. So our first journal entry based on this means we'll assume that there is only one employee with one option. One employee with one option. We don't have any choice because they have not given number of employee. Are you able to understand what I am saying? Chalega? Yes, sir. So what journal entry will do? First journal entry EB expense to SBB liability 1010. Now second year also it is SBB liability, but the fair value become 500. We will do 500 into 2 by 5 minus 10 will do. So 500 into 2 divided by 5. 502 divided by 5, that is 200 minus 10, that will become 190. What journal entry will do? EB expense account debit to SBB liability 190. 190, yes sir, this also done. But at the end of third year, now SBB reserve will become SBB liability will now become SBB reserve. So we'll do reassessment. So now reassessment will be done based on the fair value option on grant date. On grant date now, because SBB reserve, it should be based on the fair value option on grant date. So we'll take 1000 into 3 by 4 ki 3 by 5. What will do? That is more important. We'll take 3 by 4 ki 3 by 5. You bata. So just try to understand, because they are saying what they are saying. On the grant date till the end of second year, at the end of third year, as successful IPO become probable, management expected it will occur in year 4. Correct now? So it means the probability that it may occur in year 4. So once it will occur in year 4, so can you say free shares will be given on the date of IPO only. So it will be 3 by 4. So 1000 into 3 by 4, 750. Out of this, how much expense already recognized? That is 200. It means you need to recognize how much? That is 550. So what journal entry will do? EB expense 550. Correct. SBB liability 200 to SBB reserve 750. Understood? So one compound journal entry we can do, but they have done two journal entry. I have done one compound journal entry. Means first what they have done, they have converted the liability into reserve, and then they have done this journal entry. Or you can pass one compound journal entry. Compound journal entry is what? EB expense 550, SBB liability 200, SBB reserve 750. You can do that also. 750 this. So you can compound this to journal entry. Then last, because at the end of fourth year, it actually IPO occur. So we'll do 1000 minus 750. That is what? 250 to EB expense account debit to SBB reserve 250. Then SBB reserve to equity share capital 1000. Super easy question. Then also new question. If you have not done this question, you may be affected in exam, and therefore I have done this. Okay sir, chalega. With this, Ind AS 102 is done. Ind AS 102 is done. Bolo. Now Ind AS 102 is over. Now I will give you 2 minutes. If you have any question in your mind, you can ask me. Then I will take that question also. Or any doubt regarding any concept of Ind AS 102, that also I will help you. अगर आपके मन में कोई डाउट है तो वो बताइए, वो भी हम लेंगे. करेक्ट. अगर आपको लगता है कोई क्वेश्चन है उसको करवाना चाहिए तो वो भी लेंगे. बताइए, कोई डाउट है, कोई क्वेश्चन है तो बताइए. चलिए फटाफट. If you don't have any doubt, we'll proceed. Just write down no sir, no sir, no sir, so we will proceed. इन क्वेश्चन नंबर 6 स्टार वर्ड इज गिवन, तो हम वही लेंगे ना। क्वेश्चन नंबर 6 ऑफ व्हाट, आप मेंशन कीजिए क्वेश्चन नंबर 6 ऑफ आईसीएस स्टडी बेटे, क्वेश्चन नंबर 6 ऑफ योर क्वेश्चन बैंक, क्वेश्चन नंबर 6 ऑफ एक्सपेक्टेड लीज। ये तो कंफ्यूजन हो जाएगा ना कि आप कौन सा क्वेश्चन नंबर 6 पूछ रहे हो। मुझे कैसे पता चलेगा कि कौन सा क्वेश्चन नंबर 6 पूछ रहे हो। क्वेश्चन 6, अच्छा ये वाला क्वेश्चन सार लिखा हुआ है, इन क्वेश्चन 6 सार वर्ड इज गिवन, तो हम वही लेंगे ना सार, तो सार ही लेंगे, क्या डाउट क्या है, ये सार है तो दिस इज कैश सेटल। इसमें डाउट क्या है आपको, सार है तो सार ही है। आई एम नॉट एबल टू अंडरस्टैंड योर डाउट। सार मीन्स व्हाट, इट इज कैश सेटल, तो एसबीपी लायबिलिटी अब रिकॉग्नाइज करेंगे। ओके सर। इफ अदर्स यू डोंट हैव डाउट प्लीज राइट डाउन नो नो नो, तो मुझे लगेगा यस मेजोरिटी को कोई डाउट नहीं है, तो हम आगे चलेंगे। ओके नो डाउट नो डाउट नो डाउट नो डाउट। चलिए अच्छी बात है, कैसा लगा आपको, अच्छा लग रहा है, स्पीड सही है, सब चीज सही है। मुझे बताइए वेदर स्पीड इज ओके और नॉट, क्या इंग्लिश समझ में आ रहा है कि हिंदी ज्यादा यूज करूं मैं। आप बातें कीजिए मुझसे, क्योंकि थोड़ा 5 मिनट ब्रेक लेंगे, ब्रेक के बाद स्टार्ट करेंगे। तो अगर आपको कुछ और परेशानी लग रही, इफ यू वांट मी टू यूज entirely इंग्लिश और यू वांट टू यूज सम इंग्लिश हिंदी मिक्स, जस्ट मेंशन मी सो दैट आई कैन अडेप्ट। ओके, तो अब 5 मिनट आराम से प्यारी प्यारी बातें करते हैं, कुछ और बातें करते हैं। एग्जाम इज कमिंग नियर बाई, आई विल ऑलवेज से बी पॉजिटिव, पॉजिटिव रहना बहुत जरूरी है। इफ यू आर पॉजिटिव, बिलीव मी योर एग्जाम रिजल्ट विल बी पॉजिटिव। ये हमेशा डायरेक्ट रिलेशनशिप है, आपका पॉजिटिव होना बहुत जरूरी है। आपने कितना पढ़ाई किया, आपने 100% पढ़ाई किया, यू हैव डन 100%, but if you are negative, the marks will be negative. If you have done 80%, 70%, but your mind is positive, believe me, you'll get positive result. Entire game is how your mindset is right now. It is not a test of knowledge, it is a test of your mindset. Believe me, in CA final exam, I say test your mindset, not your knowledge. नॉलेज तो आपने सीए इंटर में दिखा दिया है, अब आपका माइंडसेट चेक करते हैं कि आप कितना अपने आप में विश्वास रखते हो। If you are doubting your ability, believe me, you will not be able to pass. So right now सिर्फ पॉजिटिव सोचो, yes you will become CA and definitely you are going to become CA. Okay, speed is okay. We'll take 2 minute break. हम 2 मिनट ब्रेक लेंगे, 2 या 3 मिनट ब्रेक लेंगे। आप भी ब्रेक ले लीजिए, हम भी ब्रेक लेंगे, 2 या 3 या 4 मिनट, उससे ज्यादा नहीं, ठीक है ना। चलिए ब्रेक के बाद मिलते हैं। चलिए वापस आ गए सब एवरीवन. Now let us take Ind AS 116. 116 लेते हैं. Important chapter from examination point of view. Normally one question they will ask in exam. Don't at all leave this chapter. Okay? Yes sir. हम कौन कौन सा क्वेश्चन करेंगे? विल टेक विच क्वेश्चन हम लेंगे? फर्स्ट क्वेश्चन नंबर 37. कम टू क्वेश्चन नंबर 37. जबरदस्त क्वेश्चन है. It is a जबरदस्त क्वेश्चन. Okay. Question 37 is a question of modification, in which there are two modifications. One is modification in lease. One is the modification in what? Lease term, reduction in lease term. Then additional space means there is some increase in the scope by adding some space. Increase in the scope by adding some space. So there are two modifications in this question. Of course, you have done this question, but normally what is the pattern of doing this question वो मैं आपको समझाऊंगा. Okay sir. So let's see inter. अच्छा, one more point before I do this question. There are two concepts. One is remeasurement, one is modification in the books of lessee. In the books of lessee. लेकिन whenever they remeasurement means what? Remeasurement of lease liability due to reassessment of initial estimation without changes in the agreement. Means जब agreement में कोई change नहीं होता है, if there is no modification in the agreement, that is known as remeasurement. For example, reassessment of variable lease term, reassessment of purchase option price, reassessment of lease term, etc. Without any modification in lease term, उसको remeasurement बोलते हैं. ठीक है. Then modification means what? Whenever there is a changes in agreement, means whenever question says the agreement has been modified or amended, it is a question of modification. Now remeasurement and modification more or less accounting is same. In remeasurement also you need to first calculate revised liability on remeasurement date, compare with what? Carrying amount of lease liability on remeasurement date. Any difference will be the amount adjusted to ROU asset. Amount adjusted to ROU asset. लेकिन जब remeasurement होगा ना, तो ध्यान रखना, whenever there is remeasurement due to reassessment of lease term or reassessment of purchase option price, then we calculate revised lease liability based on the revised discount rate. Otherwise, due to any other remeasurement, we'll use original discount rate. That is the special point in that remeasurement. अगर आपको उतना याद है तो आप कोई भी क्वेश्चन कर लोगे, that is very very easy. But whenever there is a modification, in modification, same formula on the date of modification. First, we need to find out modified lease liability, and then compare with the carrying amount of lease liability on the date of modification. Any difference will be adjusted to ROU asset. Any difference will be adjusted to ROU asset. There can be increase or decrease. But modified lease liability is always calculated by using revised discount rate. यहाँ पर original discount rate का कोई भी concept नहीं है. But whenever there is a modification, then be careful. Whenever there is a modification, there can be some partial or full termination. So if there is a partial or full termination, first do termination accounting, then modification accounting. So first terminate करो, then modify करो. Of course, पहले termination करोगे. So termination can be due to either reduction in lease term or reduction in underlying asset. समझे? Either reduction in lease term or reduction in scope या reduction in हम बोलते हैं decrease in scope या decrease in underlying asset. So that will result in what? Termination. It can be full or partial. In exam they will ask partial termination. Whenever there is a partial termination with modification, so first you need to find out gain or loss on partial termination. Gain or loss on partial termination will be transferred to PL account. Means you need to find out how much reduction in lease liability, how much reduction in ROU asset due to partial termination. The difference will be gain or loss, that will be transferred to PL. And then do modification accounting. For that, one question I have taken. Lessee intend to 10-year lease of 2000 square meter of office space. The annual lease payment are 1 lakh payable at the end of each year. This is very important point, at the end or at the beginning. So be careful always whenever there is a question of lease, think about at the end or at the beginning. Whenever question is silent, always assume at the beginning. As per ICAI solution, that is not my assumption, ICAI assumption hai. So whenever question is silent, always assume it is at the beginning. Correct? So in this question is not silent. Suppose they have given If 1 lakh is payable in advance, the advance means at the beginning. 1 lakh is payable in arrear means at the end. Okay, sir. That is not question silent. The question is completely silent, then we'll assume at the beginning. The interest rate implicit in the lease cannot be readily determined. Lessee incremental borrowing rate on commencement date is 6%. This is original discount rate. At the beginning of year 6, lessee agreed to amend, means modification, agreed to amend the original lease to include an additional 1,500 square meter of space in the same building starting from the beginning of year 6 and to reduce the lease term from 10 year to 8 year, 10 year to 8 year. Means now remaining lease term will be how much? It was initially 5 year, now reduced by 2 year, so now remaining lease term will be 3 year. The annual fixed payment for 3,500. Why 3,500? It is initially 2,000, added 1,500, now become 3,500 square meter is 1,20,000 payable at the end of each year. From year 6 to year 8, lessee incremental borrowing rate is now 7%. This is revised discount rate. This is revised discount rate. This point they have given to inform you that point number A, because there is an increase in space, so increase in scope, but they have said that it is not with the commensurate increase the standalone selling price, therefore it is not a separate lease. So they have just informed you that it is not a separate lease. This you can understand by own. How should the said modification accounted for? First step is what? First you need to find out carrying amount of lease liability in ROU asset on commencement date. So first step number 1, whenever this type of questions come, the first step is what? Find out. You can see already the solution I have done. First step, calculation of lease liability and ROU asset on commencement date. If 1 lakh payable at the end of each year for 10 years, the original discount rate is 6%. Of course, you can find out this you can find out there is 7,36,000 is the lease liability. And can you see, because no information has been given, if no additional information is given, then ROU asset lease liability will be always same. So ROU asset is also 7,36,000. In most of the question of ICAI study matter, ROU asset and lease liability on commencement date are same. But be careful. They may give initial direct cost, they may give the present value of dismantling, etc. So be careful. Okay, sir? Yes, sir. Point number 2, now we'll find out carrying amount of lease liability in ROU asset on modification date. Means at the beginning of year 6, means you can say at the end of year 5. At the end of year 5. Correct? So now calculation of carrying amount of lease liability ROU asset on modification date, that is beginning of year 6. So carrying amount of lease liability, you can find out in 2 ways. Either you can use the amortized cost table, or you can find out the present value of remaining lease payment for the next 5 years. That also is the shortcut, and I have used that only. So 1 lakh present value vanity factor at original discount rate, 6% for 5 years, so that will be 4,21,200. So whenever they have not asked journal entry, you don't require interest expense, so you can use this shortcut or use amortized cost table if they want interest expense. The amortized cost table you need to prepare when they ask interest expense. But why do you use amortized cost table if you want only carrying amount of lease liability? You can find out by this shortcut. Use this. We have calculated present value of remaining lease payment by using the same original discount rate for remaining lease term. Then carrying amount of ROU asset is the initial cost, accumulated depreciation. So for 5 years, the total lease term is what? 10 years. So 5 by 10, this is the depreciation. This is the carrying amount of ROU asset. Yes, sir. Chalega. This is step number 2. Now, step number 3, you need to find out what are the modifications. So in this, there are 2 modifications. One is increase in space, and second is what? Reduction in lease term. Yes, a reduction in lease term will result in termination, the first termination. Therefore, first consider reduction in lease term. Then consider what? Increase in space. Okay, sir. So first you can see we have done modification due to decrease in lease term. Now, whenever there is a modification due to decrease in lease term, the first will do termination accounting. What will do termination accounting? You can say we are here to find out calculation of gain loss due to partial termination. You need to find out how much reduction in lease liability, how much reduction in ROU asset, how much reduction in lease term. How much reduction in ROU asset, how much reduction in lease liability due to reduction in lease term. So initially, just try to understand. The remaining lease term was 5 years. Now it become 3 years. So can you say this? Actually, this 3,68,000 is for 5 years. Now it is reduced to how many years? 3 years. Means terminated for how many years? 2 years. Got this point? So we can proportionally 3,68,000 into 2 by 5. That is reduction in ROU asset. So reduction in ROU asset, what we have done, 3,68,000 into 255. This is the amount. This is the amount. Okay, sir. Yes, sir. Yes, sir. Or can I say in this 1 lakh, this 4,21,200 is the present value 1 lakh for 6th year, 7th year, 8th year, 9th year, 10th year. But can I say out of that 9 and 10 year is now removed. So if you can find out what is the present value of 1 lakh for 9th year and 10th year, that is only reduction in lease liability. That is only reduction in lease liability. Got this point? So what you can do? This 4,21,200 already we calculated. Now if we can find out present value of 1 lakh for 6th year, 7th year, 8th year, and that you deduct from this, so balance reduce, balance is reduced. So what we have done, present value remaining lease payment for 3 years, that is 6, 7, 8, using the original discount rate, because this is termination, this is not modification. Termination always do as per the original discount rate. Here only student do mistake. When I say modification, the modified lease liability is calculated by using revised discount rate. But you are right now in termination and you are terminating the original contract. You are terminating the original contract. Got this point? So what we have done? We have calculated 1 lakh, 1 lakh, 1 lakh, 6, 7, 8 present value. And that is what? This amount. So remaining is reduced liability. Remaining is the reduction in liability. Understood? Have you understood? This much you have understood or not? First, inform me. Everyone respond fast. Up to this you have understood or not? Very good. Yes, sir. Now this is reduction in ROU asset. This is reduction in lease liability. The lease liability is reduced by more amount as compared to ROU asset. This is gain. So this, the difference will be known as gain on termination. So what generally will do, lease liability account debit to ROU asset. The difference will be gain, and gain will be transferred to PL account, and this will be transferred to PL account. Okay, sir. So now you have done the termination accounting. Now can you say for reduction in lease term, we'll do modification accounting also. So now we'll do only think about write down reduction lease term. Okay. So can you say now modified lease liability will be 1 lakh, 1 lakh, 1 lakh present value by using the revised discount rate. So now we'll find out modified lease liability only considering the reduction in lease term. Right now don't think about what? Increase in space. Can you say 1 lakh become 1,50,000 because of increase in space? Are we able to understand? But can you say modified lease liability will be because of reduction in lease term will be 1 lakh, 1 lakh, 1 lakh, but discounted by using revised discount rate, that is now 7%. You can see modified lease liability, we have calculated 1 lakh, but discounted at 7% for 3 years. We can find out this. Now this become modified lease liability. Will compare with the original lease liability after partial termination, and original lease liability after partial termination will be this amount, 2,67,300. 2,67,300. Yes, sir. So you can see your modified lease liability this amount, and your original lease liability after partial termination is this amount, and there is a decrease in lease liability. Because there is a decrease in lease liability, this is known as adjustment to ROU asset, and your ROU asset will also decrease by 4,900. So what journal entry you will do? ROU asset account debit to lease liability 4,900, 4,900. So these two journal entry will do for reduction in lease term. Reduction in lease term. Now we'll come to next point, that is modification due to increase space. Modification due to increase space, and that is what now modified lease liability once again will calculate, that is now 1,50,000 for remaining 3 years discounted by 7%. So now it is 1,50,000, 7% 3 years. You can find out this is the modified lease liability. Now modified lease liability will be compared with the liability after reduction lease term. So that is the modified lease liability here, 2,60,400, 2,62,400. So this is what compared with this So once again here you can see there is an increase in liability. The increase in liability will be adjusted to ROU asset, and the general entry will be ROU asset account debit to lease liability, that is 1,31,200. Now you can find out the carrying amount of ROU asset after all this adjustment. So that you can find out carrying amount of ROU asset after all this adjustment. This is the final answer. Got this fine? Yes, sir. Means this I have done as per ICAI solution, correct now. However, practically, only just to inform you, this adjustment and this adjustment can be done together. But I will say follow ICAI solution. Why do you take panga? You know that ICAI, whoever is checking the paper, they are following solution given by ICAI. So I will say follow ICAI solution. Why to take panga from ICAI? Don't take panga. Okay? Yes, sir. Every marks count. Every marks count. So I have done solution as per ICAI. Chalega? Okay, yes, sir. Done. So this question done. Next question is what? 45. Come to 45, but before that, chalo 45 will take. So what is 45? Check karenge. Achha, 45 is a question of sale and leaseback. Sale and leaseback, they have given only one question, and now I think it is probable. From my point of view, it can be asked in exam. Probable. Okay. Understood? Okay, sir. What they have given? Entity, seller lessee sells a building to another entity, buyer lessor, for a cash of rupees 30 lakh. And you can see the carrying amount of that building was 15 lakh. At the same time, the seller lessee entered into contract with the buyer lessor for a right to use the building for the 20 year with an annual payment of 2 lakh payable at the end of each year. The annual payment for leaseback is 2 lakh payable at the end of each year. The terms and conditions of transaction are such that it is regarded as sale as per Ind AS 115. It is regarded as sale as per Ind AS 115. So what Ind AS 116 says that whenever there is sale and leaseback transfer and transfer result in the transfer of control, then Ind AS 1 means then it will be considered as control is transferred, means will account for sale as well as leaseback as per Ind AS 116. But if the control is not transferred, then entire transaction will be financing transaction. That type of question has not been given in ICAI study matter, but that will be very easy. Whatever consideration received will be financial liability, and that will be accounted as per Ind AS 109. In the books of buyer also, whatever proceed has been paid, that will be financial asset. But that is very easy, but there is no question of that nature in ICAI study material. The fair value building at the date of sale is 27 lakh. You can sale has been done at 30 lakh, but a fair value is 27 lakh. This is known as off market terms. So whenever there is an off market term, we will do some off market adjustment, and you can see the sale will be considered to done at 27 lakh only, and whatever extra amount received, that will be known as additional financing received from buyer. So that will be considered as financial liability, means loan received from buyer. Initial direct cost, if any, are to be ignored. So there is no IDC. The interest rate is given 12% per annum, which is readily determinable by seller lessee. Buyer lessor classify the lease as an operating lease. How should the said transaction be accounted by the seller and the buyer and lessor? Seller or lessee or buyer or lessor? Only one question can be asked in exam. I have the solution. I'll just give you the stepwise information. Okay? Stepwise information. Can we do? We are into question number 45. Come to question number 45. This is the question. So in this first step is what? Off market adjustment. Compare sale price with fair value. Any extra amount received will be additional financing received. Additional financing received will be recognized as a financial liability as per Ind AS 109. Now step number 2, we need to calculate lease liability. So first, what is the annual payment? Is 2 lakh at the end of each year. So first we'll find out total liability. What is the total liability? Present value of annual payment discounted by using the discount rate whatever is given the question, that is 12% per annum. That you can easily do because it is payable at the end. So it is easy. Payable at the beginning, be careful. Whenever payable at the beginning, the first year present value factor become 1. So be careful. Payable at the end, you will not do mistake, but payable at the beginning, you can do mistake. Be careful. Okay, sir? Yes, sir. Yes, sir. Chalega? Yes, sir. So 2 lakh present value annuity factor, this you can find out, and this will be 14 lakh 94,000. Okay, this is the total liability, but out of that already we have recognized a financial liability of 3 lakh, means the lease liability is what? 11 lakh 94,000. So 14,94,000 minus the financial liability already we have recognized, the difference will be lease liability 11,94,000. Correct. Now this is the second step completed. Now third step is whatever 2 lakh can you say is for two component. One is lease component, one is loan component. The 2 lakh will be allocated to lease and loan component based on the fair value of each component. Correct. So you can see lease and loan, the fair value is 11,94,000 and 3 lakh, and the annual payment has been allocated in this ratio. So annual payment out of 2 lakh, how much belong to lease? 1,59,840. How much belong to loan? That is 40,160. This you can do. This will be required for journal entry. This will be required for journal entry. Okay, sir. Yes, sir. Then we'll come to measurement of ROU asset. Now, what Ind AS says that ROU asset will measure as per the proportionate carrying amount. Proportionate carrying amount. Correct. Means what actually happens whenever you have transfer the asset. So it is not entirely transferred. Some right has been retained due to leaseback, and some right has been transferred. So whatever portion has retained, on that we cannot find out, we cannot calculate gain or loss. On that we cannot recognize gain or loss. So ROU asset is the portion which has been retained. So that should be measured as per the proportionate carrying amount. Proportionate carrying amount. Now what is the total carrying amount of the building is 15 lakh. What is the total carrying amount of the building is 15 lakh. What is the fair value of building is what 27 lakh. And what is the fair value of ROU asset? That is 11,94,000. So in this ratio, we'll allocate 15 lakh. Got this point? Have you understood? So we can do cross multiplication. So what is the formula? 15 lakh into 11,94,000 divided by 27 lakh. This become one formula. So can you say what is the ROU asset measurement? ROU asset measurement will be what? 15 lakh into 11,94,000. Means we can say in this way, it is nothing but carrying amount into lease liability divided by fair value. We can say in this way. So one formula we can say ROU asset is equal to carrying amount divided by fair value into lease liability. But this is not formula, this is mathematics. And this is the ROU asset. The ROU asset will measure at this amount. Understood? This is step number 4. The next step, what we'll find out gain or loss on right transfer. So first we'll find out total gain. Total gain is what? What is the fair value? 27 lakh minus carrying amount 15 lakh, that become 12 lakh. Out of that, how much gain relate to the right retained? Same proportionately we'll calculate. So we'll say 12 lakh divided by fair value multiply by lease liability. So we can find out gain related to right retained. Gain related to right retained. The gain related to right retained will 5,30,667, which will not be recognized. The difference will be gain related to right transfer. This will be recognized, and that will be transferred to profit and loss account. This will be transferred to profit and loss account. Got this point? Have you understood? Bolo. This point have you understood? If you have understood, I will proceed. Batao. Because this is a special point. Means point number, this point and this point, have you understood or not? Have you understood? Yes, sir. Chalo. Now let us come to the journal entry. Journal entry is very simple. But first, what we'll do? Bank account, how much? 30 lakh. Out of which, how much financial liability? 3 lakh. How much lease liability? 11,94,000. How much carrying amount of building D recognized? 15 lakh. How much ROU asset recognized? 6,63,333 as per working note, and the difference will be gain, and the gain amount will be the same amount. You can check. This will be the balance sheet figure, or you can write on that amount. The journal entry will tally. The journal entry will tally. This journal entry is a compound journal entry. Understood? Now, can you say on financial liability and lease liability, we recognize finance expense. So finance expense account debit to finance liability and lease liability both at 12%, 12% of 3 lakh and 12% of 11 lakh 94,000. This becomes the total finance expense. Correct. Then we'll do financial liability. Then we'll do journal entry for repayment. Correct. Now, so what journal entry will do? Financial liability, lease liability to bank 2 lakh. Out of that, how much belong to financial liability? As per our working note of allocation of 2 lakh 40160, and lease liability is what? 1 lakh 59,840. This will be the journal entry. Correct? Yes, sir. Then, can you see we need to also depreciate ROU asset, and ROU asset will be depreciated for how many years? 20 years, because it has been leased back for how many years? 20 years. So, depreciation to ROU asset is journal entry. However, in ICAI solution, they have given only the first journal entry. They have not given the year-end journal entry. I have done that also. Okay, sir. Now, coming to the bookshop, buyer and lessor, that will be very easy because the amount, the building will be recognized at 27 lakh. Financial asset will recognize as 3 lakh and the amount paid is 30 lakh. Okay, understood. Now financial asset, on financial asset we recognize interest income and then we receive the amount of 40160. One compound journal entry we can do. The bank amount received 40160 to finance income will be 36,000 and the reduction in financial asset will be difference of these two. That we can do. One compound journal entry we have done. Then coming to the operating lease, the operating lease can is the total lease payment will recognize over the lease term as an income because it is the same amount. So you generate a bank account 1,59,840 to lease income 1,59,840. This will be transferred to PL. And building, because they have not given the useful life of building, though we cannot find out depreciation on that. However, can you say on building, depreciation should be also calculated, but they have not given the useful life of building. Therefore, we have ignored the depreciation on building. Okay, sir. Okay, so once again, this journal entry has not been given ICAI solution. They are given only the first journal entry in the ICAI solution. Okay, sir. Chalega, done. So this question also done. The next question is what? Check karenge. 55. Come to 55. What is 55? Check. The 55 is super expected from my point of view. Super expected can be asked in your exam. Okay. Entity X is an Indian entity whose functional currency is Indian rupee. It has taken a plan on lease from entity Y for 5 years to use its manufacturing process for which it has to pay an annual rental in arrear. In arrear means at the end. $10,000 every year. On commencement date, exchange rate was 68, the average rate was 69, and at the end of year 1, it was 70. The incremental borrowing rate is 5%. How will the X limited? 1 minute. Yeah. Okay. How will the entity X measure the ROU asset and lease liability initially and at the end of year 1? Good question. The doubt will come because it is related with Ind AS 21 also. Means if you have forgotten Ind AS 21, then only doubt will come. Okay. So first, I'll explain with the solution only. I have the solution. So to save my time, I have the solution. So can you say first we'll do initial measurement of lease liability in ROU asset on commencement date. So can I say the lease payment has been done in what? Has been given in $10,000. So first we'll calculate present value in dollar only. Present value in dollar. Therefore, this interest rate is based on US dollar. Suppose they have given interest rate based on INR and US dollar. You should take US dollar interest rate. Means let me read the question once again. What they have given? It is the incremental borrowing rate for US dollar borrowing. Suppose they have given INR borrowing and US dollar borrowing. So you should take US dollar borrowing. Got this point? Yes, sir. This also you have understood. Now, KSC will convert by using which rate? Will convert by using the rate which is given at the beginning, that is given 69, that is given 68, sorry. So into 68 will do, and this will be lease liability on commencement date. And the same amount will become ROU asset. same amount will become ROU asset. Now can you say we'll do subsequent measurement? The subsequent measurement, this is very important. The subsequent measurement cannot be done based on this. So what we'll do? First we'll do in dollar, then convert by exchange rate, then INR. This is based on Ind AS 21. Correct? So opening balance was 43,200. This amount already we calculated. Then we'll do interest expense at a rate of 5%. This amount will come, and interest expense will be, because it is an expense, will apply average rate. And average rate is given 69. This is the amount. Then can you see we'll do lease payment, and lease payment has been done at the end of the year. At the end of the year, the rate is 70 and $10,000 is the lease payment. This becomes 7 lakh, and this amount is what? As per working. But can you see, because lease liability is a foreign currency monetary item, therefore should be remeasured or retranslated by using closing exchange rate, and therefore this has been once again remeasured by using closing exchange rate, and this will be your closing liability in INR. And the difference between these two, because the liability has increased, this become exchange loss. This become exchange loss. And for exchange loss, what journal entry will do? Exchange loss to lease liability. Means what will be our journal entry? First journal entry for this ROU asset to lease liability, then interest expense to lease liability, then lease liability to cash or bank, then exchange loss to lease liability. There are 4 journal entry. 1, 2, 3, 4. 4 journal entry. Understood? Journal entry you can do. Now can I say ROU asset we need to find out carrying amount. So carrying amount will be divided by 5. So this is depreciation divided by 5. So this is carrying amount at year end. Simple but difficult. Why? Because it is connected with Ind AS 21. Connected with Ind AS 21. Okay sir, one simple mistake, your 8 marks or 10 marks will be gone. But journal entry, if they ask, you can do it. Okay sir, yes sir. Next question is what? Coming to question number 58. Come to question number 58. What is question number 58? This can be one probable question. It has been given in MTP November 2022, but not yet asked in exam, but good quality of question. I like this question personally as per the quality wise, but not yet asked in exam, can be asked. Philflace Limited, a company, is into manufacturing and retailing FMCG product listed on Stock Exchange India. One of its product is bathing soap, which the company sells under brand name Philflace. The company does not have its own manufacturing facility for the soap, and therefore it entered into arrangement with a third party to purchase the soap. The company entered into long-term purchase contract of 10 years with Messrs. Radhe. Messrs. Radhe may be a supplier. Following are the relevant terms of the contract with Messrs. Radhe. Messrs. Radhe has to purchase a machine costing rupees 10 lakh from the supplier as specified by the company. So they purchase a machine costing rupees 10 lakh as specified by the company. Company means Philflace Limited. The machine will be customized to produce the soap as designed by the company. Company means this company. The machine cannot be used by Messrs. Radhe to produce soap for buyer other than company due to design specifically, but इसका मतलब किसी और पर्पस के लिए इसको यूज नहीं कर सकते थे. It can be used only for the purpose of Philflace Limited. The machine has a useful life of 10 years, and the straight line method of depreciation is best suited for considering the use of machine. The company will pay 4.75 per soap for the first year of contract. Like the company will pay. Company means Philflace Limited will pay to Messrs. Radhe 4.75 per soap produced. This is calculated based on budgeted annual purchase of 7 lakh soap as follows. Variable cost of manufacturing 4. Cost of machine means this include the cost of machine also. 1,74,015 divided by 7 lakh. So 7 lakh is the budgeted purchase during the year. So that is 0.25. Only one thing is not clear ki what is 1,74,015. And Messrs. Radhe margin, they have added 50 paise as their margin. This is the per soap cost of the company. In case the company purchases more than 7 lakh, that is budgeted number of soap in the first year, then cost of machine will not be paid for the soap purchase in excess of 7 lakh. Means this is only to the extent of 7 lakh. Suppose they are purchasing 8 lakh, so this will be paid only for what? 7 lakh, and for the extra 1 lakh only 4 plus 0.5 will be paid. However, in case the company purchases less than budgeted number of soap, then company will pay the differential unabsorbed cost of the machine at the end of year. For example, company purchased only 6 lakh, shop in the first year, then the differential amount, that is 1,74,005 minus 6 lakh into 0.25. 0.25 means this amount. The differential amount will be paid by company. Means can I say this is in substance fixed payment. In substance fixed payment means it is unavoidable. So it is in substance fixed payment. Kahin na kahin, it is one type of lease contract. Okay, got this point? Yes, sir. The cost per shop will be calculated for each year in advance based on the budgeted number of shop to be produced each year. An amount of 1,74,015 shall be considered each year for the cost of machine in year 1 to year 8 while calculating the cost per shop. Now they have given what is this 1,74,015. Any differential under absorbed amount shall be paid by the company to Messrs. Radhe at the end of that year. A charge of 1,74,005 per annum for the machine derived using the borrowing cost of 8% for 9 year and 10 year. Only variable cost of the margin will be paid. Means 9 year and 10 year nothing will be paid for the machine. Means if you find out the present value of 1,74,015 at the 8% for the 8 year, it will be equal to 10 lakh. Means it is nothing but recovery of cost price, and which is unavoidable. It become in substance fixed lease payment. In substance fixed lease payment. Understood? Yes, sir. And can I say this is based on what? Production. So this is a variable payment which do not vary according to index or rate. So that is not a part of lease payment. That is not a part of lease payment. I hope you are understanding. Messrs. Radhe does not have any right to terminate a contract, but the company has a right to terminate a contract at the end of each year. However, the company terminate a contract, it has to compensate Messrs. Radhe for any unabsorbed cost of machine which they cannot avoid the payment. For example, a company terminate the contract that they have given, you can read. In the first year, company purchased only 5,50,000 shop at rupees 4.7 per shop. Evaluate a contract. First, you need to find out whether the contract contains lease or not. For that, you need to satisfy three conditions. First, is there any identified asset? Yes. Can I say machine is the identified asset? You can add up. Second, whether customer has a right to obtain substantially all the economic benefit from the use of underlying asset. Yes, the right to obtain substantially all the economic benefit. Token is a Phil Flash Limited has a right to obtain substantially all the economic benefit because it cannot be used for any other purpose. And right to direct the use, can I say it is directed by Phil Flash Limited only, because it is used, means the right to direct how and for what purpose it will use has been directed by Phil Flash Limited, and therefore right to direct the use is with Phil Flash Limited, hence the contract contain lease. Whenever they ask this type of question, these 3 points need to be given heading and then write whatever you have understood in your own words. Then lease term is 10 year. One point, normally students are confused with this 8 year. Even though the price of machine recovered in 8 year, it does not mean lease term is 8 year, lease term is 10 year. Here you can do mistake, lease term is 10 year. Correct? Because even though lease payment is 0, lease term will be counted. Okay, sir? Yes, sir. Then you can find out, I have already said what is in substance fixed payment, already I have said. Now coming to journal entry. First journal entry, what? Present value of, we need to find out lease liability. Lease liability will be 10 lakh because present value will come 10 lakh. The first journal entry will be your ROU asset to lease liability. Correct? Yes, sir. Then can you see interest expense to lease liability, that you can do at 8%. Then lease payment, can you say lease payment will be 1,74,015 even though whatever may be the case of purchase. So lease payment will be lease liability, account debit to bank 1,74,015. Then depreciation to ROU asset, that you can do divide by 10, you can do depreciation to ROU asset. Then how many shop they have purchased? 5,50,000 and 5,50,000 into will do 4.25, sorry 4.50. So that will be your inventory. You can add, they have written cost of sale, you add on inventory, account debit to bank 5,50,000 into 4.5. This is recovered, and this is the cost of inventory, cost of shop. And this is the journal entry. Super good question. Easy, but if you have not revised it, you may do mistake in exam, and therefore I have done the revision of this. Have you understood this? Respond. Yes, sir. The next question is what? 62. Come to question number 62. 62. This is also very good question. Can be asked in multiple choice question or can be asked a descriptive question of 4 to 5 marks. How will the entity account for the incentive in the following scenario? Scenario A, entity Y, lesser, enter into an operating lease of property with entity X for a 5-year come on a monthly rental of 1,10,000. In order to induce entity X to enter into lease, entity Y provides 6 lakh to entity X at lease commencement for lease improvement, that is lease asset. So it is an incentive. So what we will do? 1,10,000 into 12 for how many year? 5. This will come how much? 1,10,000 into 12 into 5. That is 66 lakh. From this will minus incentive, means it becomes 60 lakh, and 60 lakh divided by total number of month. Total number of month will be how much? 60. It means monthly lease income will be how much? 1 lakh. So lease payment received will be 1,10,000, but monthly income will be 1 lakh. That this you have understood. So whenever at the beginning the lessor has paid 6 lakh, will pass one journal entry. This will be deferred lease incentive to bank. So our first journal entry will be deferred lease incentive cash. Then every month out of this 6 lakh, 10,000 we adjusted with the lease payment. Means our cash, how much we have received? 1,10,000. To deferred lease incentive 10,000 and lease income will be 1 lakh. This will be the journal entry, and this journal entry will be repeated at the end of each month. At the end of each month for how many months? 60 months. And automatically this 6 lakh will be closed. First scenario A you have understood. Come to scenario B. Entity Y intend to operating lease of property with entity X for a 5-year term of a monthly rent of 1,10,000. Similar question. At lease commencement, entity Y provides 6 lakh to entity X for a leasehold improvement, which will be owned by entity Y. Lesser asset. You can see here it is given lessee asset, and therefore it was lease incentive. But here it is a lesser asset, so it is not a lease incentive. Means whatever they have paid, whatever improvement has been done, that will become PP for lesser. So our general will what? PP account debit to bank, and that will be depreciated for how many years? 60 months. Correct now. Got this point. So here the general until what? PP account debit to bank. And this will not be adjusted lease payment. Your lease payment remain was 66 lakh divided by what? 60. So it means 1,10,000. So here the interest will be cash account debit. Lease income 1,10,000, and this 6 lakh will be depreciated for how many months? 60 months. So 10,000 every month. Have a monthly depreciation we don't do, but chalo ठीक है, solution में चलता है. Okay sir, this also you have understood. चलेगा. You can see Ind AS 116 also all the questions we have done, which was in my top 95 expected list. Now, if you have any question in your mind, if you have any doubt in your mind, that you can ask for Ind AS 116. Ind AS 116 is also done from my point of view. बताओ Ind AS 116. If you have no doubt, if you have no doubt in any question, no doubt in any concept, अगर आपके मन में कोई डाउट नहीं है तो आप मुझे लिख दीजिए, मैं आगे चलूंगा. ओके सर. समझ में आ रहा है ना? आर यू एबल टू फॉलो मी? जस्ट रेस्पॉन्ड फास्ट. और जितने भी जन देख रहे हैं लाइक जरूर कीजिएगा. लाइक किए बिना मत जाइएगा. सब्सक्राइब भी जरूर कीजिएगा. यू टू सब्सक्राइब द चैनल, यू नीड टू लाइक. दिस इज माय ऑर्डर है. प्लीज करिए, अच्छी बात है. चलिए, तो मेरे ख्याल से आपके मन में कोई डाउट नहीं है. यू हैव नो डाउट. विल टेक 1 सेकेंड 5 मिनट ब्रेक. 5 मिनट ब्रेक के बाद हम और भी कोई एसेट में मींस एसेट बेस्ड इंड एएस में आएंगे. विल टेक एसेट बेस्ड इंड एएस, दैट इज इंड एएस 16 एटसेट्रा, एंड विल आफ्टर ब्रेक 5 मिनट ब्रेक लेते हैं. ओके सर? यस सर. नाउ आर यू अगेन रेडी? सब वापस से आ चुके हैं? बताइए, अगेन रेडी? ओके, तो नाउ विल टेक Ind AS 16 प्रॉपर्टी प्लान एंड इक्विपमेंट। देखते हैं हमारे टॉप लिस्ट में कौन कौन से क्वेश्चन है। तो Ind AS 16 में क्वेश्चन नंबर 1, ओहो हो, क्वेश्चन नंबर 1 इज इन माय टॉप लिस्ट। ये डेफर्ड सेटलमेंट टर्म्स का क्वेश्चन है, ऑफ कोर्स कैन बी आस्क्ड इन एग्जाम। So on 1st April 2001, an item of PP is offered for sale at 10 million with payment terms being 3 equal installment of 33,33,333 over a 2-year period. Payment are made on 1st April, 31st March 2002, 31st March 2003. Okay, sir. The property developer is offering a discount of 5% if the payment is made in full at the time of completion of sale. Means क्या बोलना चाह रहा है? If the payment is made full at the time of sale, at the time of sale, then we'll offer a trade discount. So of course, it trade discount हो गया 5% का. Means what is the purchase price at normal credit terms? यही मतलब purchase price at normal credit terms is in cash terms is 95 lakh. 95 lakh. Implicit interest rate is 5.36%. And believe me, whenever they have given purchase price at normal credit terms with the discount rate, if you will find out the present value of all future payment, that will be also equal to 95 lakh. So approximately that will be equal to 95 lakh. But then also cross check by 5.36%, you will get that this will be exactly equal to 95 lakh. It means your cost price of PP will be 95 lakh. So what will you journal entry? PP account debit 95 lakh. How much paid on the same date? 33 lakh 33,333. So what is the liability? This amount will be payable 61 lakh 66,667. Then can you see, we'll find out interest. Then we'll find out interest of second year. This journal entry you can do super easy. Okay, sir. I think super easy. Only I just want to explain that this was trade discount. So this is nothing but purchase price at normal credit terms will be 95 lakh and present value will be also 95 lakh. Okay, sir. Okay, sir. Question number 1, I think no doubt. Coming next question, question number 9, which is question number 9. Check करते हैं. Question number 9, question number 9, question number 9. This is also super good question. Okay, let's see. Flying Airways Limited is a company which is manufacturing aircraft part and engine and sell them to a large multinational company like Boeing and Airbus Industries. On 1st April 2000, the company began the construction of a new production line in its aircraft part manufacturing set. So construction means, of course, this is a new production line. The construction of PP, Ind AS 16 will be applicable. Cost, they have given cost of basic material lease price less trade discount 10,000. This will be capitalized. Recoverable goods and service tax incurred not included in the purchase cost. This will not be capitalized. This will not be recoverable service tax, goods and service tax, GST. Employment cost of the construction staff for the 3 months to 30th June 2001. Of course, it will be capitalized, but this is for 3 months. Be careful. Other overhead directly related to construction, directly it will be capitalized. Payment to external advisor relating to construction, of course, will be capitalized. Expected dismantling cost will be capitalized, but at present value, this will be at present value. Additional information. The construction staff was engaged in the production line which took 2 months to make ready for use and brought to use on 31st May. It means it was brought to use or ready for use on 31st May. That is for 2 months. So this is for 3 months. So out of that only 2 months will be capitalized. One will be charged to PL account as an expense. So 800 will be capitalized. 800 will be capitalized. The other overhead were incurred in 2 month period ended. So this was incurred for 2 months only. They included an abnormal cost of 3 lakh caused by major electrical fault. So 900 minus 300 will do, because this figures is given in what thousand. So 900 minus 300. So only 600 will be capitalized and 300 will be charged to PL account as an expense. Yes, sir. The production line is expected to have a useful economic life of 8 years. At the end of 8 years, they have given about dismantling 2 million and they have given 0.6. This you can read entirely. So we'll find out the present value. So 2000 into 0.68. So this will become 1360. So 1360 will be capitalized. 1360 will be capitalized. 4 years after being brought, means this is the special point. What they are giving? 4 years after being brought into use, the production line will repair a major overhaul to ensure that it generates economic benefit for the second half of its useful life. The estimated cost of the overhaul at current price is 3 million. Current price means this is not future expenditure. What they are saying, after every 4 years, we'll do major overall expenditure. And the current price of that major overall expenditure as on this date, means as on 31st May, on the date when the asset is ready for use, is 3 million. 3 million. Got this point? Okay. The company computed depreciation charge on a monthly basis. No impairment. Analyze. Okay. Analyze so you can do. So first, let us find out the cost price of PP. That is very easy. Purchase cost 10,000. Means this all you add. This all if you add, it will come how much? 13,260. Now, what Ind AS 16 says that whenever there is a major inspection cost, a major overall expenditure, so it is quite possible initially it cannot be identified. Out of this 13,260 is how much is the inspection cost included in this cost. But case without inspection, no PP can be constructed. Of course, whenever a PP is construction, of course there will be some inspection, but it is impossible to identify how much amount is attributable, how much cost is attributable to inspection or major overhaul. Therefore, what Ind AS 16 says that you need to estimate what can be the future inspection cost, and we can find out the present value of that future inspection cost, and that will be deemed to be included in this cost price. Means out of that, okay, 3,000 already given current price. This is the major overall expenditure which will give benefit for the first 4 years, and the balance 10,260, their useful life will be 8 years. So this will be depreciated for 4 years and this will be depreciated for 8 years. But for how many months? Because the ready to use was 31st May is only for 10 months. So we can find out depreciation for 10 months for 8 years. Means 1 by 8 into 10 by 12. This will be 1 by 8 into 10 by 12. This will be 1 by 4 into 10 by 12. Depreciation we can calculate. You can see depreciation has been calculated in that way. You can see 3,000 into 1 by 4 into 10 by 12. And then 10,260 into 1 by 8 into 10 by 12, 1069. So of course we can find out the PP means 13,360 minus depreciation. This is the carrying amount to be shown in the balance sheet. Now there is one decommissioning liability, that is 1360. On that we need to add finance cost for 10 months. So we'll do 1360 into 5% into 10 by 12. That will be how much? 1360 into 5% into 10 divided by 12. The approximately 57. This will be added and this will be carrying amount of provision to be shown in the balance sheet at year end. 1. Yes sir. Correct. Now normally students are confused with one line. What they are saying? Analyze the accounting implication cost related to production line. Cost related to production line. Okay, cost related to production line are only two costs: depreciation and finance cost. Can I say abnormal loss and employment cost which was charged to PL, that was not the cost related to production line. Correct now. So therefore, in extract of SOPL, they have shown only depreciation and finance cost because they have asked only cost related to production line. If you want to show that abnormal loss and employee benefit expense, that can also be charged to PL account, but they are not shown because they have asked only cost related to production line. So this become extract of SOPL. Then they have given extract of balance sheet. To extract of balance sheet, PP will come this, and then provision. This will be of course in non-current liability under the head provision, that is 1417 can be shown the extract as shown. This need to be given with extract and what all working on, then only you'll get full marks. Chalega, but easy. It is simple question. Okay sir, done. This also done. Coming to next point. Question number 32. Come to question number 32. 32, which one? Let me see what was 32. Yeah, this is also a good question. On 1st May 2002, Sanskar Limited purchased 42 lakh worth of land for construction of a new warehouse for stocking new product. So land they have purchased 42 lakh. The land purchase had an old temporary structure which was to be demolished for the purpose of construction of warehouse. The salvage material from the demolition was to be sold as scrap. The company started construction work of the warehouse on 1st June 2002. The construction work was started on 1st June 2002. Following costs were incurred by the company with regard to the purchase of land and construction of warehouse. Legal fee for purchase, contract land and record ownership. This will be capitalized to land. Architect and consultant fee. This will be capitalized to the warehouse. Cost of demolishing the existing structure on the purchased land, 1,35,000. This one doubt will come whether it will be capitalized to land or whether it will be capitalized to the building. One miss warehouse. One doubt will come. To give star mark. Site preparation charge for the warehouse capitalized to the warehouse. Purchase of cement and other material for the construction, including GST 1 lakh and GST credit 50% payment. So out of this, minus will do 50,000 and that will be capitalized because 50% credit is there. So 50% it is non-recoverable. So that will be capitalized. So only minus 50,000 will do. Implied cost for the construction work, that will be capitalized to warehouse. General overhead or cost allocated to the construction work per month. General overhead will never be capitalized. It will never be capitalized. Overhead costs incurred directly on the construction warehouse per month. It is per month. So it will be capitalized. But for how many months, that we need to find out. For how many months we need to find out. Income received from land used as a temporary parking during construction phase. This will be deducted. This will this will not be deducted. This will not be capitalized. This will be transferred to profit and loss account. This will be transferred to profit and loss account because this is incidental income which will be transferred to PL account as per Ind AS 16. Additional information: receipt of 35,000 being proceed from the sale of salvage and scrap material from demolition of existing structure. One thing is clear that from this 1,35,000 minus will do 35,000, but this will be added to the cost of land or cost of warehouse. That is one point of discussion. Material costing will be 40,000 wasted and further 1,20,000 was spent to rectify the work design work. So this is abnormal loss which will be deducted from direct material. From material, where is the material given? This is 50 lakh minus 50,000. From this will do minus 35,000 and minus 40,000 and minus 1,20,000. So we can say minus 1,60,000. So from this will do minus 1,60,000. Minus 1,60,000. Okay, sir. Yes, sir. Then employment costs are for 10 months, that is from 1st June 2002 till 31st March 2003. The employment cost they have given for 10 months. We need to find out when the asset was ready for use. The construction factory was completed on 28 Feb. So it was started on which month? It was started on June. So June, July, August, September, October, November, December, January, February. February means 9 months. So 9 months, but they have given for 10 months. So what will do? Employment cost will do what? Into 9 divided by 10. Will do into 9 by 10. Okay, sir. Yes, sir. Chalega. Okay, sir. Which is considered to be a substantial period. It means if there is a loan, borrowing cost will be also capitalized for how many months? 9 months. The use of warehouse commence on 1st March. This is not at all relevant because depreciation will be from 1st of March. But these are both same date. 28 Feb and 1st March are the same date. Okay, sir. Means 1 day difference. The overall useful life of factory building was estimated 25 years from the date of completion. However, it is estimated roof of the warehouse will need to be replaced 15 years after the date of completion. That the cost of replacing the roof at current price will be 25% of total cost of building. So first you will find out total cost of building. Out of that 25% will be allocated roof. For that life is 15 years. For balance the life is 25 years. Okay, sir. Yes, sir. At the end of 25-year period, the Sanskar Limited is legally bound to demolish the factory and restore the site. So it means, of course, this is the dismantling cost, and they have given 80 lakh. For that, they have given what? They have given what? Discounting factor. So of course, this will be also capitalized. You can do it. Sanskar Limited raised a loan of 60 lakh at a rate of 10% per annum. On 1st June 2002, the building of the warehouse made a definition of qualifying asset. Okay, sir. Sanskar Limited received an investment income of 25,000 on temporary investment of the proceed. So what will do? 60 lakh into 10%. into 9 by 12. So 60 lakh into 10% into 9 divided by 12. How much it is coming? Bata. 60 lakh into 9% into 9%. Oh, sorry. 60 lakh into 10% into 9 divided by 12. It's coming 4 lakh 50,000. So 4 lakh 50,000. And how much investment income? 25,000. The minus karo. And this will be capitalized. This will be capitalized. I think I'm doing correct calculation. Just check it. Assuming the cost of demolition of all structure directly attributable cost of land. Oh, it is given the question. This means this 1,35,000 minus 35 will be added to land. From my point of view, if this is not given, this should be added to warehouse. If this point is not given, because just try to understand why you have done demolition. You have done demolition for the construction of warehouse. It is directly attributable to the construction of what warehouse from my point of view. But chalo, we'll go as per the information given the question. It will be added to land. The company follows straight line method of depreciation. You need to calculate cost of construction, depreciation charge, and carrying value. Good question. Already asked in exam for how many marks? 8 marks. Let's see. Purchase of land 42 lakh. This has been capitalized, and 1 lakh the demolition cost. This becomes the total cost of land. You got 1 marks. For this only 1 marks. Achha, they have asked explanation. You need to explain. Explain only what you do. This is the what? Purchase of land. This is the purchase price will be added. Then whatever you are adding, that is directly attributable cost. Only that much. This is the directly attributable cost for purchasing land. Directly attributable cost for purchase for bringing the cost into present location and condition for its intended use. This you write down. Don't write much in exam. Then you can see architect fee. This will be added. Site preparation cost. This will be added. You can see 14 lakh 10,000. So minus 50,000 and minus 40,000 they have done. Minus 40,000 done. However, they have done in two part of solution. In one of the assumption, what they have taken, they have done minus means what I have assumed. So because nothing has been given, what will assume this 1,20,000 is included in this. So this assumption will prevail. From my point of view, this is an alternative solution they have given, and most of the teacher will teach this only. From my point of view, nothing is given, so you can't assume that 1,20,000 is not included in this. We will always assume this is included in this, and we'll do minus 1,20,000. Correct? Then can you say whatever 8 lakh was given, that was for how many months? 9 months. At 10 months, we'll do 9 by 10 into 9 by 10. Yes, sir. Then this 35,000 was for 1 month, so we'll do into 9. Allocated over cost 0. Income from temporary use 0. Finance cost already we calculated 4,50,000 minus investment income 25,000. Demolition cost recognize demolition cost means dismantling cost recognize the provision. Then we can find out 80 lakh into present value factor. This is the total cost of warehouse, but out of this 25% roof and 75% will be the building. This remainder, this depreciation is how many year? 15 year. This depreciation is 25 year, but for how many months? Because it was ready for use for on 28 Feb. So it means 1 month depreciation 1 by 12. 1 by 12 will do. You can see depreciation they have calculated for 1 month. 1 month. You can find out this become depreciation. Correct. You can find out total depreciation. You can find out a carrying amount. That is very easy. Okay, sir. But 1 second calculation. Calculation. One mistake 0 marks. If you are not doing calculation carefully, 0 marks. And if you are not reading the question carefully, in exam what same question will come. But when you are not reading the question carefully, because in exam we are in hurry. So I will say be calm. Have patience. Have belief in yourself. Don't be in hurry. You have sufficient time. 3 hours is more than enough to write 100 marks paper. But what happened? We become super fast and we think much. Don't think much about other things. Think about exam paper. You'll be able to complete in 3 hours. Okay, sir. Chalega. Now, Ind AS 16.3 question from my point of view, what was included in top 95 expected question I have done. Now, if you have any questions in your mind, you can ask me. That also I will do. Well, I'll wait for 2-3 minutes. If you have any doubt, any other questions in your mind, that also I will do. No doubt. So we'll take a break of 4 or 5 minutes. We'll come back again. Okay. You also take break. I will also take a break. Okay, chal. Okay. Only I will say 2-3 minute break, not more than that. Now can we again start? Bully. Everyone. Let us come to Ind AS 38. Everyone ready? Bolo. Ind AS 38, there are two questions, 25 and 31. Let us first take 25. Then we'll take 31. Okay, sir. Come to 25. Super expected. Once again, expected already asked in exam, but expected in MCQs also. X Limited is engaged in developing computer software. The expenditure incurred by X Limited in pursuance of development of software is given below. Now, one thing we note that whenever development phase, till the date of technical feasibility is obtained, recognition criteria is not satisfied, to whatever expenses incurred before that will be charged to PL account as an expense, even the incurred during development phase. and whatever expenses incurred after the technical feasibility is obtained, that will be capitalized till the asset is ready for its use. This is the concept. You can see A, B, C incurred 2 lakh toward cost of coding and establishing technical feasibility. This all will be charged to PL as an expense. Correct? Then paid 7 lakh other direct cost after establishment of technical feasibility. This will be capitalized. Incurred 2 lakh toward other testing costs. Of course, this will be capitalized. Cost of producing product master for training material. Normally, students have doubt about this. Why it will be capitalized? They could just try to understand. Normally, what I say, staff training expense will never be capitalized. But this is not a training expense. This is the cost of producing product master for training material. It is as simple as when I am recording the class for selling my product. So first I record up whatever recording we have done. We create one master file. From that we copy and give to what? Our student. The product master for training material means this is the actual intangible asset that is produced. The cost of producing product master for training material, this will be capitalized. Understood? A focus group of other software developer who invited a conference for introduction. Conference cost will never be capitalized because this is the cost incurred after the asset is ready for its intended use. And net profit is they have given estimated. So the capitalization will be how much? 7 lakh plus 2 lakh plus 3 lakh, that is 12 lakh. So you can see 12 lakh will be capitalized. Okay, sir. 25 done. Come to 31. 31 is also can be expected. But chalo theek hai. Super Sound Limited had the following transaction during the financial year 1920. Means it was asked in exam in Jan 21. After that, it has not been asked. But good question. On 1st April 2019, Super Sound Limited purchased the net asset of Music Limited for 13 lakh 20,000. The fair value of Music Limited identifiable net asset was 10 lakh. So you can see 13 lakh 20,000 minus 10 lakh. So it is goodwill is what? 3 lakh 20,000. So goodwill is 3 lakh. This is first point related to business combination. So as per business combination chapter, we can find out goodwill. Okay. Super Sound Limited is of the view that due to popularity of Music Limited product, the life of goodwill is 10 years. Super mistake. Can I say as per Ind AS 103, goodwill cannot be amortized. It is only impaired as per the requirement of Ind AS 36. Okay. So this amortization is not possible for goodwill. Okay. Yes, sir. On 4th May 2019, Super Sound Limited purchased a franchisee to organize musical show from Arman TV for rupees 80 lakh at an annual fee of 2% of musical show revenue. So can I say 80 lakh has been paid for franchisee. So this will be capitalized. And whatever annual fee is paid, 2%, can I say that will not be capitalized because that is to generate revenue. That is to generate revenue is royalty income. So this will be charged to PL as an expense, 2% of musical show revenue. The franchisee expire after 5 years. So can you say it will be amortized in how many years? 5 years. The musical show revenue is 10 lakh. This become revenue of the year for the financial year 1920. The projected future revenue for the financial year 2021 is 25 lakh and 30 lakh per annum for the remaining 3 years. Now the question is that in this case, this is very special point. You will amortize 80 lakh during 5 years, but on an SLM basis, in the ratio of cash flow, in the ratio of this revenue, because revenue of the first year is 10 lakh, revenue of second year is 25 lakh, revenue of third, fourth and fifth year 30 lakh, 30 lakh, 30 lakh. What do you see? This will be amortized in the SLM basis, on SLM basis, in the ratio of revenue. Just respond fast. Everyone respond fast. Everyone respond fast. This is a special point. So what our Ind AS 38 says that amortization based on revenue is not possible and therefore will not do amortization based on revenue. Amortization, if nothing is given, will be based on SLM basis. So we'll do based on 5 year on SLM basis. Okay. On 4 July 2019, Super Sound Limited was granted a copyright that had been applied for Music Limited. During financial year 1920, Super Sound Limited incurred 2,50,000 legal costs to register the patent. So this will be capitalized, and 7 lakh additional cost to successfully prosecute a copyright infringement suit against a competitor. Can you say whatever legal expense incurred that will be charged to PL account because that is after the asset is ready for its intended use. The life of the copyright is for 10 years. Super Sound Limited follow an accounting policy to amortize all intangible on SLM basis or any appropriate basis over a maximum period permitted by relevant Ind AS. Now as per Ind AS, there is no maximum period permitted. So this is also totally bakwas. But taking a full year amortization in the year of acquisition. Now it is given the question that they want to amortize for a year, even though it was acquired during the year. So even though it was acquired on 4th May, even though it was acquired on 4th July, we'll charge depreciation for the entire year based on 5-year and based on 10-year. So here the depreciation will be 16 lakh. Here the depreciation will be 25,000. Understood? And you can prepare a schedule, but normally just try to understand what I have seen. The student don't know how to write down the format. Now, first, this is non-current asset. We don't write down intangible asset. We write down goodwill and other intangible asset. You can also write down goodwill and other intangible asset as per the format of division 2 of schedule 3 of Companies Act. Then you can add, this is a mistake in the solution. I think you can rectify by your own. Then revenue from operation, extract of SOPL, 10 lakh is given actual revenue. Then amortization, you can find out, that is 16 lakh 25,000 already I have said. And then other expense, one is 7 lakh, that is legal cost, and one is 20,000, that is 2% of 10 lakh, that is annual fee, that they have added as an other expense. This you can do. Then this normally student I have seen will not follow. Whenever they ask extract, so you need to also prepare the intangible asset, this particular format, what is the gross book value, what is the amortization, what is the net book value. This you need to do by your own, then only they will give marks. Then they have given some working, this working we can do, but what I have seen, students know the solution, but they don't know how to write down solutions, and there the marks is deducted. There the marks is deducted. Okay, sir. Correct. So Ind AS 38 is also completed. Any question of Ind AS 38, whatever you have in your mind? If you have any doubt in Ind AS 38 question, batao. From my point of view, Ind AS 38, you can do it. Okay, chalo. Can we take one more Ind AS? Yes, sir. So come to next Ind AS. Let us take Ind AS 23. So we'll take 23 and 24. Two questions are there. Come to Ind AS 23. Ind AS 23. Question number 23 and 24. This is the super expected question. I think now you have no doubt about this question, but when this question have came for the first time, lot of doubt was there. Okay, but I am here to revise all the question, whether you have doubt or you don't have doubt, that I don't know. LT Limited is in the process of constructing a building. The construction process is expected to take about 18 months from 1st Jan 2001 to 30th June 2002. The building meet a definition of a qualifying asset. LT Limited incur the following expenditure for the construction. 1st Jan 2001, 30th June 2001, 31st March 2002, 30th June 2002, 5 crore, 20 crore, 20 crore, 5 crore. On 1st July 2001, LT Limited issued 10% redeemable debenture of rupees 50 crore. The proceed from debenture from the part of the company's general borrowing which it uses to finance the construction of qualifying asset. The proceed from the debenture form part of company's general borrowing which it uses to finance the construction of qualifying asset, that is the building. LT Limited had no borrowing general specific before 1st July and did not incur any borrowing cost before that date. LT Limited incurred 25 crore construction cost before obtaining general borrowing on 1st July 2001 and 25 crore after obtaining general borrowing. Yes, for each of the financial year, first year, second year, third year, calculate a borrowing cost. Means normally any student who have conceptual doubt, they will be able to struggle in this question. Is what they have said. In this question, there are 3 years. This is 31st March 2001. This is 31st March 2002. And this is 31st March 2003. Okay. So expenditure was incurred 1st Jan 2001. This is 1st Jan 2001. How much incurred? 5 crore. Then on 30th June 2001 to 30th June 2001, it was 20 crore. Then 31st March 2002, 5 crore. Then 30th June 2002, it is 20 crore. I think it is correct. Yes, sir. Then they have given that on 1/7/2001, they have taken a borrowing 10% redeemable debenture of 50 crore. Borrowing is 50 crore. And before that, they have incurred 25 crore. And after that, they have incurred 25 crore. It means before that, there was no borrowing cost. Understood? Correct? It means now we need to find out for the year 31st March 2001, what is the borrowing cost? Okay, no borrowing cost because there is no borrowing. There is no borrowing, so there is no borrowing cost to be capitalized. The borrowing cost to be capitalized will be nil for this year. Now coming to 31st March 2002, correct now. What will be the amount of borrowing cost to be capitalized that we need to understand? So just try to understand because borrowing has been taken at this point of time. So borrowing cost has been incurred after this month. So this is how many months from 30th June to 31st March? It means 9 months. So 9-month capitalization will be done. But for this purpose, can I say we should take carrying amount of the expenditure on what? PP. This 5 crore, whatever expenditure has been incurred, for this borrowing cost will be capitalized for how many months? 9 months. For this also 9 months. But for this it is 0 month because it has been incurred at the end of the year. At the end of the year means what will do? 5 crore, 20 crore, 5 crore. You write down date wise. Okay. What is the interest? It is 10%. Into 10%. Into 10%. Into 10%. This is 9/12. This is 9/12. This is 0/12. And you can find out the answer. Just check karo. They have given that only. Into 9/12. Into 9/12. They have done first average expenditure. Then multiply by 10%. 1.875 will come. Understood? Yes, sir. Now for the third year, this is interesting. 31st March 2003. Normally if you read Ind AS 23, they have said that we need to find out the average expenditure for the year, means including the previous construction cost which has been capitalized. Understood? Yes, sir. So now in this you will do capitalization for how many months? That is from this to this 3 months. So this will be eligible for capitalization for 3 months. We will take 5 crore, then 20 crore, then 5 crore, then 20 crore. This is 10%, 10%, 10%, 10%. This will be 3/12, 3/12, 3/12. But this will be 0/12 because this is incurred at the end only on 30th June. So this will not be eligible for capitalization. Yes, sir. Yes, sir. But whatever interest was capitalized in previous year, that will be also a part of expenditure. So now that will be also what? Included in the expenditure, and we'll add 1.875 into 10%, that is 3/12. And this will be the borrowing cost to be capitalized for the third year. Understood? You can see the solution. What they have given? 5 crore, 20 crore, 20 crore, 5 crore. So this is 3, this is 3, this is 3, this is 0. And this is what? 3 months. And they have done first average expenditure multiply by 10%. This amount will come. This will be your answer. Okay, sir. Chalega. Any doubt? No doubt. I'd like to take one more question. 24. 24 is also very good question, which can be asked in exam because recently added in exam. This is recently added in the RTP MTP. Okay. Okay. This question I will take. Good question. PQR Limited is engaged in the tourism business in India. The company has planned to construct a holiday resort at Simla. The cost of project has been made out of the borrowed fund 100 lakh at a rate of 12% per annum. 40 lakh were disbursed on 1st April 2002 and the balance 60 lakh were disbursed on 1st June 2002. The site planning work commenced on 1st June 2002 since the chief engineer of the project was on medical leave. The company commenced the physical construction on 1st July. But can you say site planning work was commenced on 1st June 2002? Correct? Understood? So the physical construction is not at all relevant, even though expenditure has been started for the activities which are necessary for the construction of the asset that will trigger the commencement of capitalization. So 1st June 2002 is the date of commencement. And the work of construction continued till 30th September 2002, and therefore the construction activity stopped due to landslide on the road which led to the construction site. It means 30th September with date of suspension. The road blockage have been cleared by the government machinery by 31st December 2002. Construction activity have resumed on 1st Jan 2003 and has completed on 20th Feb 2003. The date of opening has been scheduled to the 1st March 2002, but unfortunately the district administration gave the permission for opening on 16 March due to lack of safety measure like fire extinguisher which has not been installed by them. Determine the amount of borrowing cost to be capitalized toward the construction result. Landslide is not common in Simla. Whenever landslide is not common in Simla, it means this suspension is necessary. So it will be suspended on 30th September and recommencement will be on which date? 31st December, or you can say 1st Jan. Means can I say from June will be capitalized, July will be capitalized, August will be capitalized, September will be capitalized, November no capitalization, December no capitalization, January will be capitalized, February will be capitalized. Then what is given? And delay in approval from district admin of minor administrative work. So whatever this fire extinguisher work was left that one minor, means substantially all the activity was completed on 28th Feb. That will result in what? In the cessation of borrowing cost to be capitalized, and therefore it will be ceased on 28th Feb. So for how many months? 1, 2, 3, 4, 5, 6. So 6-month capitalization will do. You can see how much month they have taken. They have also taken 6-month capitalization for the first case. Balance you read. But the second case, what they have, landslide is common in Simla. Whenever landslide is common in Simla, it means they were aware of the fact that landslide will be happen. Therefore, that will not lead to the suspension because they should take a precaution for that. So that will not lead to the suspension, and that is due to what? Necessary, means will take it is the necessary part of the construction, and therefore no suspension will arise. And delay in approval from a district administrative work is a major administrative work. It means borrowing cost will be ceased not on 20th Feb, it will be ceased on 16 March. Therefore June to 16 March, how many month? I think it is 9.5 month, and therefore the second case they have done capitalization for how many month? 9.5 month. Good question, but if you have done it, you know about this. So borrowing cost also completed from my point of view. Now any more question? If you have any more question, if you have in your mind, that also I can do. If any questions is in your mind, batao. Any questions? Can we take one more Ind AS? Yes, sir, we can take. Now let us come to today. So this asset-based Ind AS are very, very simple. Okay. Tomorrow we'll take consolidation and business combination. Means if it is possible to take both, we'll take both. Otherwise, we'll take one, or I will try to take both only consolidation business combination tomorrow. The time will be same 5. Okay, sir. Time will be same. Chalega? Bolo. Yes? Yes, sir. The time now I will inform you because our Paryushan Parva is starting. So for that I need to adjust the timing. Today I need to adjust the timing for that reason only. Okay. So I was not aware of the fact, and I announced at 11 a.m. in the morning. Then I was some work because of that festival. So I will adjust the timing because some adjustment is required. So I will give you the YouTube live session. In that the timing will come. So we'll meet tomorrow 100% for business combination consolidation. There will be some time adjustment. So you need to bear with me that time adjustment. Okay, sir? Chalega? Yes, sir. So now let us come to 36. We'll come to 36. Okay, come to 36. 36 may we have 4 questions. Which is question? First is 29. Come to 29. Question number 29. This. Oh, this is a very good question. And very lengthy. Already asked in exam. Can be again asked in exam. Elia Limited is a manufacturing company which deals to manufacture cold drink and beverages. Now they have given the question. They have a machinery A in Baroda plant, which is used for the purpose of bottling, and there is one more machinery B. Club with machinery A. Machinery A can be individually have an output and also sold independently in the open market. Machinery A is capable of generating cash flow independently. Machinery B cannot be sold in isolation, and without clubbing with machinery A, it cannot produce output as well. It means machine A plus machine B will be one CGU. The company considers this group of an asset as CGU, and the inventory amounting to ₹2 lakh and goodwill amounting to ₹1.5 lakh is included in such CGU. To inventory and goodwill will be also added. Machinery A was purchased on 1st April 2013 for ₹10 lakh and residual value is 50,000. So 50,000 residual value. Machinery B was purchased on 1st April 2015 for ₹5 lakh and with no residual value. The useful life for both machine A and machine B is 10 years. You can see right now the date of impairment testing is not known, but it was the date of purchase is given. The company expects the following cash flow in the next 5 years pertaining to machine A. The incremental borrowing rate of the company is 10%. This can be used for calculating value in use of machinery A. On 31st March 2018, from this we can understand this is the date of impairment testing. So 1st April 2013 to 14, 15, 16, 17, 18 means for this 5-year life has been expired, and 1st April 2015 to 16, 17, 18 for this 3-year life has been expired. Correct. The professional value have estimated current market value of machinery is 7 lakh. They have given fair value. The valuation fee is 1 lakh. Already the valuation fee is not cost to sale. This is not transaction cost. So they have given to confuse you. This will not be deducted to find out fair value less cost to sale. There is a need to dismantle the machinery before delivering it to buyer. Dismantling cost 1.5 lakh. Specialized packaging cost is 25,000 and legal fee is 75,000. These all three are cost to sale. Therefore fair value is 7 lakh and cost to sale is given. You can easily find out fair value cost to sale of machinery A. The inventory has been valued in accordance with Ind AS 2. The recoverable value of CGU is 10 lakh on 31st March 18. In the next year, they have given in the next year means reversal wala point bhi hoga. The company has done the assessment of the recoverability of CGU and found that value of such CGU is 11 lakh. Means yahan pe kitna tha 10 lakh, now it become 11 lakh on 31st March 2019. The recoverable value of machinery A is 4 lakh 50,000 and combined machine A and machine B is 7 lakh 60,000. So 7 lakh 60,000 is combined value minus karenge machine A value. So what is left? 7 lakh 60,000 minus 4 lakh 50,000, that is equal to 3 lakh 10,000 is the value of machinery B, but as on 31st March 2019. Required: compute the impairment loss on CGU and carrying value of each asset, compute the prospective depreciation of next year, and compute the carrying amount of CGU after reversal. Already asked in exam for 8 marks. So first we will find out machinery A and machinery B carrying amount. You can see machinery A 10 lakh, will do depreciation for 5 years and we can find out a carrying amount. Okay, here the residual value is given 50,000. You can find out. Machinery B cost is 5 lakh. Expired year is 3 years. We can find out depreciation. There is no residual value, and this is 3 lakh 50,000. This we can easily find out. Then, because can you say they have given value in use and fair value less cost to sale of machinery A, so we can find out maximum impairment loss of machinery A. Because can you say CGU of course will do impairment CGU, but machinery A should not be impaired. More than its maximum impairment loss. For that, we'll find out value in use of machinery A. So for that, this information has been given year 1, year 2, year 3, year 4, year 5. Case this 1 lakh is excluding residual value, so we'll add residual value 50,000 also, and we can find out value in use. The discounting rate is given 10%, and of course we can find out that. They have done that, only check karo, and we can find out this become value in use. In this normally student do mistake, they ignore the residual value at the end of 5th year. This is super danger. Then we'll find out fair value less cost to sell. You can 7 lakh and the 3 expense are given, that is packaging, dismantling, and one is what legal fee. So this become fair value less cost to sell. Whichever is higher will take. So this become value in use, and this become fair value less cost to sell. This is higher, so this become recoverable amount of machinery A. The recoverable amount is how much? 4,89,650. Now we'll find out maximum impairment loss of masonry A. So what is the carrying amount is, what is the recoverable amount is, this become maximum impairment loss of masonry A. Now we'll do impairment testing of CGU. To impairment testing of CGU we'll take all asset. You can see A, B, C, inventory, A, B, inventory, goodwill. So first we'll find out carrying amount already given, already calculated. This is 5,25,000. This is before this impairment loss. This is not the impairment loss. I mean, we'll do impairment testing of CGU. Okay, na? 5,25,000, 3,20,000 is already calculated. Inventory they have given 2 lakh. Goodwill they have given 1,20,000. Correct. This is the carrying amount. Total carrying amount. What is the value in use? Sorry. What is the recoverable amount of CGU they have given? That is they have given 10 lakh. So 10 lakh they have given recoverable amount of what? CGU. Of course, impairment loss is 2,25,000. It will first allocated to goodwill to the extent of carrying amount, and balance will be allocated to A and B in the ratio of this. The balance is how much? Batao. So 2,25,000 minus 1,50,000, 75,000 balance. 75,000 in this ratio you allocate. Inventory may no allocation because inventory will be impaired as per Ind AS 2, not as per Ind AS 36. Outside the scope of the chapter of Ind AS 36. Are you able to follow me? Just respond fast. If you are able to follow me, like button press karo. You need to press the like button. Okay? And subscribe the channel. You need to subscribe the channel because every day I am coming, you will get notified whether I am coming or not, at which time I am coming. Okay, sir. Are you able to follow me? Respond fast. Yes, sir. Okay. Yes, sir. So this 75,000 will be first allocated in the ratio of their carrying amount. This is 5,25,000. So 75,000. The total is what? 5,25,000. 5,25,000 plus 3,50,000. Total is 875. So it is 75,000 into 525 divided by 875. It's coming 45,000. So masonry A allocation is 45,000 and masonry B it will be 30,000. But you can see, can you allocate more than this? No. This is the maximum impairment loss and therefore they have allocated this. And the balance 75,000 minus 35,350 they have allocated to masonry B. But can I say, first they need to inform you that 75,000 should be allocated this issue, but it cannot be more than this, and therefore they have allocated to masonry A this much 35,350 and balance has been allocated to masonry B. This is as per the requirement of Ind AS 36, and you can see this become the revised carrying amount after impairment loss. Okay, sir. Now can you see we can find out depreciation after this? So of course on 4,89,650 the remaining is for life of 5 years, residual value is 50,000. So we can find out the prospective depreciation and the carrying amount. On this also the remaining useful life is 7 years. We can find the prospective depreciation and the carrying amount. Okay, sir. Then inventory, it has been taken assumption that there is no change in the inventory and goodwill become 0. So this becomes the total carrying amount at the end of next year, 31st March 2019. So this is after 1 year. Okay, sir. Okay, sir. Correct. Now we'll do for reversal of impairment loss as on 31st March 2019. So as per reversal, there is one rule. After reversal, the revised carrying amount should be lower of recoverable amount or carrying amount as if no impairment loss was ever charged. So what they have done, masonry A, masonry B, goodwill so we should not write. Because goodwill once impaired, the impairment loss of goodwill cannot be reversed. So why they are writing goodwill, I don't know. Okay, goodwill deleted. Now masonry A, masonry B, masonry inventory. So first we write down carrying amount as if no impairment loss was ever charged. Means if impairment loss was never charged, then what would be the carrying amount? You can see it was initially how much? Before 5,25,000. 5,25,000. Again depreciation of next year. So depreciation of next year, what was depreciation per year? They have given 95,000. The minus 95,000 to that will become 4,30,000. Correct now. So 4,30,000. This is the amount, carrying amount as if no impairment loss was ever charged. Recoverable amount is given the question. You can see 4,20,000 for masonry A given. Then 7,60,000 minus 4,50,000, 3,10,000 already we calculated, and this will be 2 lakh. The lower of these will be what? Revised carrying amount. So lower of this will be revised carrying amount. To lower of this will be this. This is the revised carrying amount. So this become 9,30,000. What is this? The revised carrying amount. Are you getting whatever I'm saying? Have you understood? So can I say if you want to find out reversal amount, so what will be the amount of reversal? Can I say amount of reversal will be this minus this reversal, because this was the total carrying amount after depreciation at the end of 31st March, at 31st March 2019. So this minus this will be the amount of reversal, and if you compare with the individual amount, you will get the reversal of individual asset also. They have not done that, you can do that. Okay, sir. This is one good question, can be again asked, but super good question. If they ask, you should be very much careful. One question, this require attention. 36. Question 36. Come to question 36. This is also very good question. Still not asked in exam, can be asked. What is given? Check karo. On 31st March 2001, Vision Limited acquired 80% of equity shares of Mission Limited for rupees 190 million. The fair value of net asset of Mission Limited that were included in the consolidated statement of financial position of Vision Limited were 200 million. Okay, sir. Okay. It is the group policy to value NCI in subsidiary at the date of acquisition in proportionate share of fair value of INM is Pasinam at Pasinam SME's partial goodwill. It will be a question of partial goodwill. So of course, goodwill, so you can find out. That is sure. On 31st March 2004, the Vision Limited carried out an annual review. Means after how many years? 2, 3, 4. Means third year. Of the goodwill on consolidated Mission Limited and found evidence of impairment. No impairment have been evident when the review was carried in the first year and second year. The review involved allocating the asset of Mission Limited into 3 CGU, computing the value in use of each unit. The carrying value of individual unit before impairment adjustment are given below. So there were 3 CGU A, B, C. You can see intangible asset PP and current asset has been allocated. This is a total carrying amount and total value in use given, but goodwill has not been allocated. It was not possible to be meaningfully allocate a goodwill on consolidated to individual cash CGU, but all the other net asset of Mission Limited are allocated in the table shown above. Means goodwill cannot be allocated to smaller CGU, goodwill will be allocated larger CGU. It means we'll do impairment testing in 2 stages. Understood? The intangible asset of Mission Limited have no determinable market value, but all the current assets have a market value that is at least equal to their carrying value. The value in use of the Mission Limited is a single CGU. Single CGU is 350 million. They have given value in use of company asset total for the second stage impairment testing, that is 350 million. Discuss and compute the accounting treatment of impairment goodwill as per Ind AS 36. So first you need to find out goodwill. So how to find out goodwill? The goodwill what? PC is 190. What is the fair value minus 200? 200 ka 20%. That is 40. And that is 200 minus. So that become what? 190 plus 40 minus 200. That is 30. 30 is the goodwill. Correct. Now first we'll do first stage impairment testing. The first stage impairment testing is 170 is the total carrying amount and 180 is recoverable amount. So there is no impairment loss. Here 90 and 60. So what is the impairment loss? 90 minus 66. That is 24. This 24 will be allocated to intangible asset in PP in this ratio. Of course, you can allocate. Here also no impairment loss. So only impairment loss will be for unit B, and of course allocation you can do. Just check the answer what they have done. You can see what they have done. This is the unit B. 10, 50, 30 and 24 has been allocated this ratio. So this is the revised carrying amount they have done. Means 66 is the revised carrying amount. Now we'll do second stage impairment testing. In second stage impairment testing, unit A will be 170, means that will be carrying amount only once. It will be 170. This will be 66. This will be 100. You can see 170, 66, 100. And goodwill will be also allocated. But goodwill is 30. But okay, this is partial goodwill. So we should convert partial goodwill to full goodwill. by adding the unrecognized share of NCI. So 30 is how much percentage? 80%. So 30 into 100 divided by 80, how much? It is 37.5. So this is after that adjustment. That adjustment is a special point of Ind AS, that is if you remember. So for impairment testing, what we'll do, we'll make partial goodwill, full goodwill, but only for impairment purpose. This is done, correct? And then we'll compare with the total, we compare with the recoverable amount of the company as a total, that is 350 given the question. So the impairment loss is 23.5 and 23.5 will be entirely allocated first to goodwill, but out of this 23.5, 80% belong to parent and 20% belong to NCI, which is not recognized. So 20% cannot be charged to profit and loss account because that is not recognized. So our impairment loss will be only 23.5 into 80%, that is 18.80, and you can see they have done also 18.80 will be the impairment loss which will be attributable to the owner of parent company. Understood? And this impairment loss, whatever is in the first stage, this impairment loss will be attributable to both owner of parent company and NCI as per the requirement of Ind AS 110. Got this point? Super good question. Chalega? Yes, sir. Done. Then coming to question number 43. Come to question number 43. This is also one of the favorite question of the institute, can be again asked. I think this is super easy. You can do it by your own, but I am supposed to do all the questions, so I am taking Pacific Ocean Railway Limited has 3 CGU, namely train, railway station and railway track, and the carrying amount of which is itna. You can CGU they are given train, railway station, railway track, this, and remaining useful life they have given. Pacific Ocean Limited also has 2 corporate assets, land itna, building itna. Land, the carrying amount of land can be allocated on a reasonable basis, but they have not given the reasonable basis. Whenever the reasonable basis is not given, we'll allocate in the ratio of carrying amount multiplied by remaining useful life. So this will be the ratio to allocate the carrying amount of land to the CGU. Got this point? Building, the carrying amount of building cannot be allocated. Okay, sir. Means in this also 2-stage impairment testing. CGU, recoverable amount they are given train, railway station, railway track and company as a whole for 2nd stage impairment testing. Calculate the impairment loss. In this only one point I just want to inform you, because in the solution they are following that. Correct. They have said ignore decimal. And because that is in my viewpoint and ICAI viewpoint are 2 different viewpoints, so I always say why to take Pangat, follow ICAI solution. Okay. Yes, sir. Now carrying amount they have given. Okay, sir. Of the CGU, that is already given year. Okay. Now, in this case, useful life is 10 year, 20 year, 20 year. So, weighted based useful life is 1, 2, 2. You can do 10 year, 20 year, 20 year also. And then they have given product of this and this. Means product they have calculated 1005 into 1, 2250 into 2, and 3302. And they have calculated percentage. And can you see when they have calculated percentage, they have done rounding off in this. And because of that reason, when you take the without rounding off percentage, the answer will be different, and with rounding off the answer will be different. Means you can see 1500 divided by 12,600, it is actually 11.90%. And from my point of view, percentage should not be rounding off. We do rounding off only in amount, not in percentage, but they are doing rounding off in what? Percentage also. To follow IC solution, we'll do rounding off in percentage, and then we'll find out how much will be the allocated carrying amount of land based on that percentage. Based on that percentage, this will be added to the carrying amount of CGU. This will total carrying amount of CGU after allocation of land. Now this will be compared with their recoverable amount, and you can see if you compare the recoverable amount in this to their impairment loss. This impairment loss will first will be allocated both in the ratio of their carrying amount to 198 will be allocated this to 198 will be allocated to what? 198 will be allocated to carrying amount of CGU and the corporate asset in the ratio of their carrying amount. So they have done that only. You can see here 198 has been allocated to land and other asset in that ratio only. You can see 36 has been allocated to that too in the ratio of their carrying amount that you can allocate. And then you can find out revised carrying amount of train, railway station, railway track, land, building and Pacific Ocean. Correct. You can see carrying amount, then impairment loss. You can find out. And this you'll also add building, which was unallocated. And Pacific Ocean is the name of the company. This is the company as a total. Okay, sir. Correct. So this is carrying amount after impairment loss. Then this total carrying amount will compare with the total recovered amount, and there is no impairment loss further, and therefore nothing to be allocated. But suppose there is impairment loss, this impairment loss will be allocated only to building, means unallocated building, which was allocated building to the larger CGU. Okay, sir. Yes, sir. Yes, sir. Last question. This is also new question. Newly inserted question can be asked in exam. Newly inserted question. Let me explain. Good question. At 31st March 2001, the asset of CGU are being reviewed for impairment. The carrying value of CGU net asset is rupees 65 lakh, excluding any restructuring provision. So carrying amount is how much? 65 lakh. And the remaining useful economic life of the recognized asset is 8 years. So remaining useful life, economic life is given 8 years. Management approved budget at 31st March 2001 include restructuring cost of 3,50,000 to be incurred in 2002. The restructuring is expected to generate cost saving of rupees 1 lakh per annum from 2003 onward. Correct. Now what Ind AS 36 says that the cash flow arising from restructuring will be considered for calculation of value in use when the restructuring is committed. And as per Ind AS 37, if the management is committed for restructuring, then provisions should be also recognized for that. Got this point? Former budget have been prepared for 3 years to 31st March 2004. A zero growth rate is assumed because market conditions are extremely competitive, and this is expected to continue for the foreseeable future. The future cash flow estimated with restructuring consideration, means in this the cash flow of restructuring has been considered. Without restructuring consideration, means in this case cash flow generated from restructuring has not been considered. So of course restructuring will get some will generate some cash inflow. Got this point? Means what has a management approved budget include restructuring cost of 3,50,000 and restructuring expected to generate cost saving of 1 lakh per annum. So you can see 9 lakh was this. So if they will save some expenses, so your cash inflow will increase by 1 lakh, 1 lakh, 1 lakh every year. And can I say in this case, we will also recognize a provision. Means if there is a means it was 8,70,000 now. It was 8,70,000. The management approved budget include restructuring cost of 3,50,000 to be incurred in 2002. Correct now. So 8,70,000 minus 3,50,000 how much? That is 5,20,000. This question is correct. In 2002, the net cash flow without restructuring is 8,70,000. Exceed the net cash flow of restructuring 5,20,000 by now. That same thing is given. The future cash flow, which include inflation, have been discounted at a rate of 4%. For simplicity, it has been assumed that cash flow arises at the end of each year. Of course, if nothing is given, we'll assume it arises at the end of each year only. Compute impairment loss on 31st March 2001. Restructuring costs recognized in the financial statement. In the financial statement of 31st March 2001, it means the management was committed. It means we have recognized the provision. In that case, provision will be how much? 3,50,000, and we'll consider this. Okay, sir. So you can see they have, with restructuring cost, they have calculated this. This, so of course, you can calculate 65,14,000. So provision for restructuring costs were recognized. So how much restructuring provision? 3,55,000. Now in this case, 65 lakh was the carrying amount. Minus will do 3,50,000 liability. So 65 lakh minus 3,50,000. The carrying amount will become 61 lakh 50,000. Your recoverable amount is 65 lakh 14,000. You can see recoverable amount is more than what? Carrying amount, and therefore no impairment loss. Understood? Yes, sir. No provision for restructuring costs were recognized, means management was not committed, therefore provision will be nil. And in that case, your recoverable amount will be this amount, Yes, sir. So carrying amount will be 65 lakh only. Your carrying amount will be 65 lakh and your recoverable amount is 62 lakh 73,000. So 62 lakh 73,000 and the difference will be how much? 65 lakh minus 62 lakh 73,000 is equal to 2 lakh 27,000 will be impairment loss. Why it is 65 lakh? Because provision was not recognized. Why? Because the management was not committed as per Ind AS 37. Provision will not be recognized. Got this point? So this is a good question because Ind AS 36 read with Ind AS 37 and therefore I like this question personally. Till now not asked in exam, can be asked in exam, but here you can see they have done full rounding off. You can see 962. अब देखो 5,20,000 into 0.962 is coming 5,240, but they have done rounding up. Don't worry, in exam you take 5,240. Your answer whatever is coming that is correct. Why they do rounding off, we also don't understand. Arey, why you are doing rounding off, Baba? And when our answer will not match with your answer, you will deduct marks. This is not insaf. Correct now? And they have nowhere written that rounding off is done. Rounding off is not required. You do as per your answer will be correct. Whatever you are doing, don't think about that right now. What will happen if you do rounding off? If you will not do rounding off, then what will happen? That is not a matter of question. So Ind AS 36 is also completed from my point of view. Okay, sir? Yes, sir. Now, what are the Ind AS left? Ind AS 2, I think no discussion required, you can do it. Ind AS 40 also no discussion required, you can do it. Ind AS 20 also you can do it. Ind AS 41, I was supposed to take some question of this. Correct now. And Ind AS 105, I was supposed to take some question of this. This I will take tomorrow. Okay, sir. Today I am doing this much only. Okay, sir. Chalega. So balance this whatever chapters are left. Don't worry about it. I will complete that also. Okay, sir. So today this much only. If you like the session very much, comment not in the live chat box, comment in the message box so that I can understand and I can pre-program myself for the next class, because we also require motivation. Without motivation, these classes are not possible, and motivation comes from your like, from your comment, and believe me, we are also human being. At the end, we are human being, and it requires a lot of energy to take these classes. You also know, I also know, this requires a lot of energy, and that requires a motivation, self-motivation. So if you give some good comment in the message box, you will press like button, then of course I will be motivated to take classes tomorrow. Okay, sir. So just message me how was the classes, whether you have liked this or not, whether you want me to continue for business combination, consolidation tomorrow or not. And if some questions are there which are not in my top 95 questions, that also you require discussion, that also you can message in this particular message. Don't, not in chat box, in the comment box. Okay, sir. Thank you very much for today. And believe me, one thing I always say, मेरी बात को समझो. This coming days will decide your entire result. Be focused, be determined, have self-belief in yourself. I say this 8 days, whatever left, this will only change your result. Abhi, suppose if you have not done any study, nothing to worry, 50% marks is required. Out of 100, only 50%. Just try to understand, only 50%. 50%. You have done a lot of studies, lot of hard work you have done. Only thoras of positiveness means you need to become positive. Think about your ability. Focus on preparation. Don't do bakwas thing, unnecessary thing. Remove from your life till the exam end. You are going to change your result. And you are going to increase your marks by 20-30 marks if you focus on yourself. Don't focus on others' life. Don't focus on social media. Don't focus on unwanted things. Okay, sir. Bye bye. Love you all. All the best for your preparation.